Here we go. All right. Peace, power, and profit, everybody. How y'all doing out there? It's storming over here in South Carolina. It is storming. It has been storming for the last few days, and it's probably not going to end today. As long as when it's time for me to catch my flight on Friday night, yeah, I'm good to go. So I got my brother Chris here with me on the panel, and hopefully here soon I have other brothers and sisters who gonna possibly join in on the conversation. We'll see where it goes. Anyone is welcome, especially if you're in our back chat group. Join in on the conversation. So last week we were speaking on self-employed. We used the publication from the IRS for self-employed, and that's publication 353 or 334. I'm sorry, publication 334. And I'm actually going to go back to that publication, and I have it up right now. So if any of you guys are in business and you are self-employed, it is really good to become familiar with the IRS regulations, the Internal Revenue regulations for business. Don't just put your business in the hands of the tax preparer or the CPA. You have to have some accountability to the financial state of your business. And so, with that being said, before I get into more of the tax piece, because eventually I want to be able to cover information from each of these publications so that you can have a go-to guide, I want to go through this article. So when we first got on, I told Chris, hey, I want to have the conversation about, are you in business or are you just borrowing money? Are you in a business of just, you start an initiative and you seek investors, or you seek grantors, or you have money saved up in your personal account and you seek to just withdraw. It's like your best friend. So you're borrowing from everything that you actually put in place. So I looked up, did some searching, and I found an article that kind of speaks to the direction in which I wanted to go on this evening. So again, peace and power for the profit for those who are tuned in. Let's have a conversation. And this is from Wealth Management. It says borrowing from your business without borrowing from your future. Is there a better way to borrow without disrupting your long-term goals? All right. It says most entrepreneurs recognize that success is a byproduct of calculated risk, that and that building a successful small business requires a certain amount of agility. But they also realize it requires a lot of capital to retain the agility and size strategic opportunities. Let me make sure you guys can see this out there. Again, make sure when you come in, like the show, I'm going to spread this out a little bit more for those who may be tuning in. All right, so you can see. According to Endurance International Group, more than half, 50%, 57% of US based small business owners planning to make investments in their businesses this year, ranging from product development to investing in real estate. By some would dig into their personal savings to fund those strategic opportunities. It is not uncommon. Inc. magazine's The State of Small Business Survey from 2015 found that over the past 5 years, 46% of entrepreneurs had tapped into their personal savings to fund their businesses. But is there a better way to borrow without disrupting your long-term goals? Quote, we tend to find the families we work with try to shy away from assessing their personal wealth because they have so much other stuff going on. Private investments, taxes, trust, real estate planning, says Michael Ochutu. I think I said it right. Financial advisor and senior Vice President, RBC Wealth Management's Midtown New York office. Quote, I review tapping into their personal wealth as a last result if they ever come to a dire straits and need help solidifying the business. So basically, this article is saying that if people have a need, they'll go into their personal savings to fund their business, which taps into any of their future goals or future strategies and plans. His colleague, Scott Edwards, financial advisor and managing director at RBC Wealth Management's Midtown New York office, says he agrees, pointing out that pulling money out of a personal investment vehicle can be a slippery slope. Quote, if you miss just 1 year of investment return, even in a conservative portfolio at 5%, it can really derail your portfolio in the long term, says Edwards. If you're running a business, you're usually going to need money for more than 1 year. Instead, Instead, says Edwards, an entrepreneur can leverage the business and its assets to tap into funds for further growth. Here are some ways small business owners can borrow from their business without disrupting their long-term goals. So here they're going to give some tips that you can use instead of borrowing from your personal to help you out in your business. Unsecured line of credit. Unsecured line of credits are coming back. They've been dead since 2008, says Edwards. With unsecured lines of credits, lenders basically look at the individual borrower, go over their liquidity profile, and extend a line of credit just based on who they are, he says. Since no asset is acting as collateral and the line of credit is borrowed against the possibility of future business returns, these sorts of credit vehicles can be highly risky for lenders and often come with high interest rates. At a quick glance, an unsecured loan may seem like a better option for a business, but given that they are only given to well-established, reputable businesses, a secured line of credit is more likely the route for small businesses and starting out. Asset-based loans or lines of credits, as the name suggests, asset-based loans are structured around assets, typically accounts receivables and inventory, explained Dean Deuce, Vice President of Wealth Initiatives and Senior Manager of the Wealth Solutions Group at RBC Wealth Management in Minneapolis. Asset-based loans can equate to around 70 or 80% cents of a business eligible receivables and 50% of finished inventory. The credit guarantor establishes a lien against an asset that belongs to the borrower, and if the business owner defaults on repaying the loan or line of credit, the lender has the right to seize the collateral and liquidate it. So that was asset-based loans or lines of credit. Uh, Quote, the reality is a lot of businesses with assets that are either not strong enough to or mature enough to fund the loan and the owners end up doing personal guarantees. Unfortunately, as businesses transition from the startup phase to standing on their own legs, sometimes owners forget their personal guarantee is still attached. Quote, you have to continually review your loan or line of credit on a periodic basis, adds DeZeus. We we see business owners not doing a periodic review of their debt and personal guarantees, and they miss an opportunity to refinance or remove their personal guarantee from a business loan. The worst case is when they don't do a review and the business falls for some reason and their personal assets are at risk. Skip the woes by reviewing where possible refinancing. Okay, so let's get into another one. Securities-based lending. Securities-based lending is the process of pledging a portfolio of, say, blue chip equities or municipal bonds as collateral to back up a loan of around 50 to 60% of those asset values. Loan to value rates can lower the concentrated stock position and higher the bond portfolios. Quote, you're not selling those stocks, you're just borrowing against them so the stocks can still grow in your portfolio, says Edwards. This also lets the investor avoid a taxable event. In terms of payback, you don't have a schedule where you need to pay back the principal every month or every quarter. You're just responsible for the accrued interest every month. So the balance will actually grow over the length of the loan unless you decide to pay some of that down. While security-based lending can provide liquidity for certain businesses or personal opportunities, there are some risk involved. Securities-based lending can come with restrictions on how one uses account proceedings. There's also the risk that an entrepreneur might have to provide additional funds or securities if their existing securities start slipping in value. Failing to Failing to do so, the bank can sell an assets in the collateral account at its discretion, seriously impacting a long-term strategy. Quote, look at the amount of market cycles we've been through since 2005. The amount of volatility, says Edwards. You really have to focus on the market cycles and the micro level of things, the overall environment. You guys talk about that a lot. Know the market cycles. Chris, you want to chime in right there? Hey, peace, Sujao. Okay, Chris in the back.
About the
Market
business cycle.
cycles. Yeah,
Yeah. What about it?
I was saying you all talk about the business cycles a lot. I was asking, did you have a comment you want to say? It said that it was saying you really have to focus on the market cycles and the macro level of things, the overall environment. I remember you guys were sharing with someone who was trying to invest, and you was telling how you got to also pay attention to the market cycle
Oh
as you
yeah,
can.
yeah. So you got a period of expansion, uh, and then expansion at its peak, then contraction, and then the trough. So
Mhm.
it's important to know which cycle you're in, and that'll tell you, how money is going to be flowing or coming in, or how people are going to be making money, and how businesses are going to be operating during that cycle. So you should be doing that as well.
Mhm.
So you can't be like a business owner and, you know, C corporations, they're in a time period, let's say it's in a contraction cycle. And so C corps, they're cutting back and trying to preserve capital. But you out here, trying to solicit business when it's a contraction cycle. That won't work because you're not paying attention to the business cycle we're in, and then you're not paying attention to the consumer. So that means your business is going to be in some trouble because you don't understand the cycle. Simple and plain.
Right. I'm gonna take some notes because I'm gonna come back to look up where they can find the business cycle when I'm done with this article. All right. It says he says he uses the same advice for entrepreneurs who find themselves nearing retirement with portfolios predominantly stacked with shares of their own companies. Quote, we have a CEO of a publicly traded biotech company whose own stock trades at $20 a share, and he owns 1.5 million shares, says Achu, whatever. When we sit down and go over his real estate plan, asset allocation, and how he diversified and protecting his personal wealth, he got a big problem on his hand because 98% of his wealth is tied up in the company. The wealth management advisor says they've been working with him to help him diversify, but like all entrepreneurs who built a company from the ground up, it can be a tough sell. You never want to have all your eggs in one basket. This may be your baby, but at the end of the day, you're going to want to retire, and at some point, and you won't have some securities. He adds, no one knows what tomorrow is going to bring. So, excuse me, you want to be diversified so that you can run your business and sleep at night knowing you're going to be financially secure. Chris, um
What?
speak to that right there, where the business owner, the CEO, he had 1.5 million of his shares in his business, and so but 98% of his net worth was in the company. So if he
Oh,
pulled the shares out when he retired, then his company probably null and void, right?
yeah, because that's that's a big chunk of the company. He pretty much took. So what, 5% left maybe? That's
Mhm.
nothing. That company's done. It's cooked, as they say. So I mean, if he's pulling out that much, that means he don't think the company is worth it no more. If he's taking out 95%
No,
of,
he no, he was saying that at some point,
hmm
the CEO gonna want to retire. So yeah, it's cool. He got 1 million, but if that's 98% of his net worth in his company,
oh,
so
is
when he retired, guess what? His company gonna retire too. If it
well,
98% of his net worth,
you saying 98% of his net worth is tied up in the company?
yes.
Okay. Well, that, yeah, that's one, that's risky as hell, and that's no diversification at all. So, you know, the company and himself is at risk. So that will be business risk, that will be liquidity risk, that would be default risk. That company is in some trouble if he just taking all of that out. That's crazy. So if his wealth is all tied up into that, the employees, and does he have employees? He will have to if he has that much
Mhm.
money taken out.
Right.
They're screwed.
They're definitely screwed. They're definitely screwed.
That's not a good look. That's
And
why you should
so,
diversify.
and that's why they're saying now. So now when you take this and relate it to your own business, for you, it may not be a company, it may be your personal bank account. So if all your personal money is tied up into your business, or if you use your personal money to fund your business, then one, you got to sit back and decide, am I in business to gain a profit, or is my business lucrative? Is my business an attraction to customers? Who is my target audience? Branding comes into play a whole bunch. So if you're never going to make any money in business, then you have to come with a reality check. Like, why am I in business? I'm just a borrower. My business doesn't. I mean, I have a business, but it's not a business, so to speak. Because really, you just using all your personal money, and a lot of times people get double taxed because we talked about that last week. You put your personal money in a business account, you've already been more than likely that money has already, that's after taxes. Then you put it in a business account, and then you don't know that personal income that you borrowed and put in your business is not income. So then you end up counting it as income during tax season, and then you get double taxed. Because a self-employed business income is personal income. It get taxed. It's a personal income. So you have to know that. You have to know where to put it on your tax form. I'm talking about these tax positions because we're halfway through the year, and by the time you look up, it's going to be tax season. In September is when they start training. So let's look at these publications. Let's go back to the small business publication. Those individuals. Last week we shared um the business. We was in publication 334, and we shared how do you know if your business or not. So I'll just do a quick recap. It says a trade or business generally an activity carried on to make a profit. So if you have an entity you're trying to make a profit, then you have a business, right? And it goes on to say the facts and circumstances of each case determines whether or not an activity is a trade or business. You do not need to actually make a profit to be a trade or business, but as long as you have a profit motive, right? All right. And we also shared real quick the difference between an LLC, a sole proprietor, and an independent contractor. So we identified that if you are self-employed, you are an LLC, it's because you have incorporated your business, and now for tax purposes, you are a single member disregarded entity. If you do not have an incorporation, you did not go to the Secretary of State and file any paperwork, then you are a sole proprietor. And then if you are a professional, like doctors and lawyers and accountants and general contractors and things of that nature, and you do services and you get paid and you get a 1099, then you're considered a independent contractor. And so that's the difference between the two. Um Chris, you know anybody, okay, you know anybody who is a realtor or who could speak to buying homes?
I know a few people.
And then see if we can interview them or invite them to a show near you. It would have
Okay.
to be in a couple weeks because next Wednesday I'll be in Vegas.
Okay. I'll talk to them and see what their schedule is like.
Okay, Ujao, give us 2 weeks. All right. So let's see. So we were right here. We were on questions that we were going to go through. So, Chris,
What?
a lot of times Self-employed individuals don't know what type of taxes they have to pay. So the question says, what kinds of federal taxes do I have to pay, and how do I pay them? So let's go see. Filing and paying taxes, paying business taxes. This chapter explains the business taxes you may have to pay and the forms you may have to file, right? So you have the benefits of filing electronically, and then you have federal taxes you may have to pay on their due date, and they have a checklist. So let's go to it. Let me back up. All right, so you have tax withholding and estimated tax. If you have employees, that comes into play, right? Starting a business and keeping records. That's publication 585, 583. I think I'm going to go there next. Publication 583, because record keeping is very important. If you're not keeping up with your records, oh my goodness. Now the forms that you need, you got the limitations on business losses. That's that's form 461. If you're doing individual tax returns, that's the 1040. If you're doing U.S. tax returns for seniors, that's the 1040 SR. Estimated tax for individuals, that's the 1040 ES. The energy efficiency commercial reduction, that's form 7205. The Schedule C, which goes with the 1040, that's your profit and loss for business. That's what most sole proprietors use, and that's also with most single disregarded entities with the LLC, unless they are making a profit. And profit don't mean $1 or $2, okay? And then you have self-employed taxes, right? So you can pay your taxes along the way, or you can pay them at the end of the year. It's a choice, right? I want to go to the publication 583. Let me see. Let's go there. Publication.
So next week you're gonna be in Vegas.
Yep. I could still start the live. If you want to do some shows, I'll just be on mute. Let's do this publication. Record keeping. So publication 583, starting a business and keeping records. This should be on bookmark. You should have this bookmark if you're in business, right? So let's go down. What business owners need to know. As a new business owners, you need to know your federal tax responsibilities. Table 1 can help you learn what those responsibilities are. Ask yourself each question listed in the table, then see the related discussions to the answer. Okay, let's go to the table 1. We already did what form of business will you use, right? Determining your type of business. Let's see. We just did that, and I think we're very clear. Oh, why are you acting crazy? Hold on. I don't want to open up. So I am a LLC disregarded entity. What are you, Chris? Sole proprietor? You incorporated in Texas?
I'm a sole proprietor.
And Chris is a sole proprietor. Bam. There you go. All right. Will I need an EIN, an employer identification number? I have one. You have one, Chris?
Yeah.
I filed using my EIN. Do I have to start my tax year in January, or may I start it in another month? That's a good question. Please go there. Let me see what this says. All right. You must figure your taxable income and file an income tax return based on an annual accounting period called a tax year. A tax year is usually 12 consecutive months. There are two kinds of tax years. There's a calendar year. A calendar year is 12 consecutive months beginning January 1st and ending December 31st. Number two, fiscal tax year. A fiscal tax year is 12 months ending on the last day of the month except December. A 52, 53-week tax year is a fiscal year that varies from 52 to 53 weeks, but does not have to end on the last day of the month. All right, what's a good example of this? Nonprofit organizations. If you have a nonprofit organization, usually you operate on a fiscal year. So just remember that. Most regular, most regular businesses operate on a calendar year. It's very rarely that you will have a for-profit organization operating on a nine. Now, the state agencies operate on a fiscal year, which is July 1st to June 30th. The federal operate on a fiscal year, which is October 1st to September 30th. And nonprofits, theirs will go on based on their determination date on the letter that they receive. And then small businesses are usually January to, or private businesses are usually January to December. Okay, so Ujao is a LLC and he elected to be an S corp for 2023. That means he making some dollars. All right.
Mm-hmm.
Let's keep the party rolling. Let's go back up. Go back to my. All right. So that is really good to know. A lot of people don't know that and they don't understand it. What method can I use to account for my income and expenses? So let's talk about this accounting method. People get confused. They don't really understand it. They don't really know how it works. So this is a good one. Choosing an accounting method. An accounting method is a set of rules used to determine when and how income and expenses are reported. You choose an accounting method for your business when you file your first income tax return. There are two basic accounting methods. One, the cash method. Two, the accrual. So under the cash method, you report income in the year you received it. You usually deduct or capitalize expenses in the tax year you paid them. The accrual method, under the accrual method, you generally report income in the tax year you earned it, even though you may receive payments in the latter year. You deduct or capitalize expenses in the tax year you accrued them, whether or not you pay them that year. So usually accrue method don't, if you're just a regular business owner, don't be trying to mess with accrue the
Mm-hmm.
accrue method and get yourself all mixed up, right? You probably more than likely are on a cash method. Okay, let's keep going. Let's go back. So that's accrue to cash. Then you have what kind of federal taxes will I have to pay? How should I pay them? There it goes. So business taxes. The form of businesses you operate determines what taxes you must pay and how you pay them. The following are four general kinds of business taxes. You have income tax, self-employed tax, employment tax, and exercise tax. So let's look at them. Income tax. All businesses except partnerships must file an annual income tax return. Partnerships file an informational return. If you're a sole proprietor, so this is what you must file, then you may have to pay income tax, self employed tax, estimated tax, employment tax, Social Security and Medicaid taxes, and income tax withholdings, federal unemployment tax, and excise tax. The form is a 1040, and so on and so on. So we know about that. And then the other taxes are reported on a 941 or 940. That's if you have employees, right? Now, somebody might ask, what is excise tax? So, excise taxes are usually involved when you're dealing with manufacturer or selling certain products, or you operate in certain kinds of businesses. You use different types of equipment, facilities, or products, right? Or you receive payments for certain services. So those individuals who are dealing with all these other taxes, it's applicable to their companies, and usually like truck drivers who have trailers, or you use buses and things of that nature. You win the lottery, so all of that applies. So let me go back. Now the partnership, they file annual return of incomes. Employment taxes and exercise taxes could be applicable. Partner and partnership, which is individual income taxes, self-employed taxes, and then possible estimated taxes. And then if you're a C Corp or S Corp, you file income taxes, maybe estimated taxes, and employer taxes. And then S Corps shareholders, income tax and estimated taxes. So this publication is good for you to have because it'll walk you through those particular taxes. If you have employees, so for those of you who have employees, you're also responsible for Social Security and Medicaid taxes, federal income taxes withholding, and unemployment taxes. I know sometimes people start their businesses, they have employees, meaning they're giving out W-2s, and they never go to the Department of Revenue. They think a lot of times they only know about the federal side. They forget about the state side, or maybe they do the state side and get their withholdings number, and they forget about the unemployment side. So that's important. Let's see. Which forms must I file? We just talked about those. Are there penalties if I do not pay my taxes or file my returns? Wait, let me go back to forms because it might be something I didn't share. I know I didn't say that 1065. Yeah, I thought I shared those. All right. Let's go back to the penalties if you don't file your taxes. All right. The law provides penalties for not filing returns or paying taxes required. Criminal penalties may be imposed for willful failure to file, tax evasion, or making false statements. Failure to file returns. If you do not file your tax return by the due date, you may have to pay tax penalty. The penalty is based on the tax not paid by the due date. See your tax return instructions for more information about this penalty. Failure to pay tax. If you do not pay your taxes by the due date, you will have to pay a penalty for each month or part of the month that your taxes are not paid. Failure to withhold, deposit, or pay taxes. If you do not withhold income, Social Security, or Medicaid taxes from employees, or if you withhold taxes but do not deposit them or pay them to the IRS, you may be subject to a penalty of the unpaid tax plus interest. Failure to follow information reporting requirements. The following penalties apply if you are not required to file information or returns. Failure to file information return, a penalty if you do not file information returns by the due date, if you do not include all required information, or if you report incorrect information. So the bottom line, file your taxes. Right? Now, can the penalties be waived? These penalties would not apply if you cannot show that the failure were due to reasonable cause or willful neglect. If it is your first time, usually sometimes you can file a waiver and they may grant it. ADP, yep, I use ADP, QuickBooks. I favorite QuickBooks, but I do payroll for a company that does ADP, and I do um payroll for a company that does QuickBooks. Yup. All right, let me go back. So this was let me go back at the top. We've done all of those, and all right, let me go back. So that was that one. And then I want to go to oh, I should have covered. All right. So boom. So that was the guide for small businesses. So make sure you guys bookmark that. Let's go to travel, gift, and car expenses. Before I go there, Chris, any questions?
No.
All right. So you know what you identify as, and you know what you file your tax forms on, right?
That's for me?
Yep.
Oh no, do it again.
You know what you identify. You're
Yeah,
self-employed, and you identify as a
sole proprietor.
right. And then you file your taxes on what kind of you're on the calendar year, and your business expenses your business information get reported on a Schedule C,
Yeah.
right?
Mm-hmm.
And you're
Correct.
filing the Form 1040.
Correct.
Yay! All right.
Yeah. Remember we did my taxes together.
I know. Don't tell nobody.
Okay. Y'all didn't hear that.
All right. Let's go to travel, gift, and car expense. So I used to have this publication 463, and I liked the version I had because it gave me this little graph that I actually really love, and it gave me a good, very easy way to explain mileage, how to track your mileage. But let's see what they're working with. Oh, Chris, I was in a meeting with two organizations, and the mileage came up, and on my budget I actually had 68 cents a mile. I should have had 67. And she said, why are you paying 68 cents a mile? Our mileage is only 56 cents. I said, no, ma'am. I said, I got this from the IRS. She said, I did too. I said, well, when the last time you did that? Because mileage hasn't been 56 cents since 2021. She was like, what? Let me update this. We're not even giving our people the correct money. She was
Oh my
like,
God.
because they reimbursed for mileage, and she was still stuck at the 56 cents rate. And mileage has not been 56 cents since 2021. It has changed,
Mm-hmm. That's
so
yeah,
that was crazy. All right.
that is
So
crazy.
let's so this publication hasn't been updated. However, the mileage rate has changed. So don't go off this 65 cents. I'm gonna tell you guys right now. That was 2023. As a matter of fact, let me bag this up and show you the standard mileage rate for 2024. Let me go up. You need to understand that has changed. I love this right here on this publication. This is my go-to baby. But let me bag it all the way up. Let me bag it up. Let me bag it up. How did I get here? Let me go back up. Up, 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 up. Here it is. So the 2024 rate, let me see if it brings it up. Uh is actually 67 cents. And why is it taking me here? Let me find it for y'all. Why it didn't come up directly here, I'm not sure. But let me open up a new window and I'll definitely show it to you. Let's see. Mileage rate for 2024. Right here. Bam. Here we go. Bam. 67 cents. So you guys would know, if your company is reimbursing you at the wrong rate, it's 67 cents per mile for businesses. That means every time you drive your vehicle to and fro, and we'll go over that in a second. So let me go back to my publication. 67 cents. She's like, 56 cents. I'm like, girl, you are late to the party. All right. So I like this part, the business expenses, the record keeping, right? Um, so where it just took me, let's talk about travel. All right. If you're temporarily traveling away from your home, you can use this chapter to determine if you have deductible travel expenses. All right. Now it just gave me that little chart, and I'm gonna pull it up because it's easier to explain it on the chart. So let me go back. Let me go back. So that's where they hide it. So there's a part. Where is it at? It was in the beginning, right here. So there was a chart I just saw. Where'd it go? Man, I should have kept it when I saw it. Maybe this. Oh, okay, here it is. I came here, but that was another. Let me go back. I ain't gonna be able to find it. Ah, I should have kept it up. There was another image of this that I went to that I was gonna. Oh, here it is. I'm sorry. I'm moving too fast. All right. So this is the easiest way for me to explain the transportation piece to you. All right. So it says this chapter discusses expenses you can deduct for business transportation when you are traveling away from home. Defined in chapter 1. These expenses include the cost of transportation by air, rail, um, rail, bus, and taxi, etc. And then the cost of driving and maintaining your car. Transportation expenses include the ordinary and necessity costs of all of the following: getting from the workplace to another in the course of your business or profession when you are traveling within the city or general area that is your home, your tax home. All right, so visiting clients, customers, going to do business anywhere from your regular workplace, or getting from your home to a temporary workplace. So let's go to the chart. I like using this chart, right? Because it gives you a clear understanding. Pay attention, Chris. So if this is your home and this is your regular place of duty, a regular job, main job, if you go into a temporary location, you can keep up and track your miles for deductions. If you're going from your temporary location to the job, you can track those miles as well. From the job to a second job, you could track it. So basically, if you go from the temporary location back home, you can deduct those miles. But if you go from the regular job and the second job back to your home, though, you cannot track those miles. So to track your miles, you have to make sure you include the date, to and from location, and the mileage. I mean, the miles, how the total distance, right? So it says
Say
home
that again.
to the way you track it. If you're using paper and pen or using anything other than an app,
I would never do that. So
yeah. So you have to document the date, to and from location, how many business miles, or you could put your speedometer, the time the what your your odometer read prior to departing your home and when you arrive wherever you're going. And so here's a chart. So you could screenshot this because this is the an easy way to remember it. So you might say, well, what constitute my home? The
yeah,
place where you reside, transportation expenses between your home, your main or regular place of work, or personal commuting expenses. So this is where you reside. This is your home of record. This is what you're counting on your driver's license, so to speak. Your
okay,
regular or main job, huh?
okay,
Your regular or main job is your principal place of business. This is where you predominantly do business, right? Because some people do business in more than one place, but this is the place where we can find you. Your office space, if you have one, or where you regularly go to do business. You cannot track any miles to and from that location. It is not deductible. Temporary workplace, a place where your work assignment is realistically expected to last and does in fact last 1 year or less, unless you have a regular place of business. You can only deduct your transportation expenses to a temporary location outside of the metropolitan area. So that's basically if you go to another city, you go to a rural area, and you have to do some work there for a temporary time period. Second jobs. If you regularly work at two or more places in one day, whether or not for the same employer, you can deduct transportation expenses of getting to and from that workplace. So some people have second jobs, some people go do work, maybe their own side work, things of that nature, you can deduct. So here's a caution. If you're entitled to reimbursement from your employer, but you don't claim it, you can't claim a deduction for expenses to which an unclaimed reimbursement applies. This type of deduction is considered a miscellaneous deduction that is no longer allowable due to the suspension of miscellaneous itemized deductions subject to 2% floor under the section 67A. So some people travel on their job and their job reimburse them for traveling. If you didn't get reimbursed or your job didn't reimburse you, you can't come back and say, well, I use my car. This is business. I'm going to go and I'm going to claim it. Now, if your job doesn't offer reimbursement and you do business for your job, you use your vehicle to go someplace, then you can claim it. You can claim that mileage. But you have to be keeping track of that, right?
yeah.
Right. Right. Gifts.
Mm-hmm.
This is a good one now. If you have gifts in the course of your trade or business, you may be able to deduct all or part of the cost. This chapter explains the limits and rules for deducting the gift's cost. Limits $25. You can deduct no more than $25 for business gifts you give directly or indirectly to a person during a tax year. A gift to a company that is intended for the eventual personal use or benefit of a particular person or a limited class of people would be considered an indirect gift to a particular person or the individuals within the class of people who receive the gift. So if you're going to give a gift to someone from business, 25 bucks.
That's it.
That's it. If you give a gift to a member If you give a gift to a member of a customer's family, the gift is generally considered to be an indirect gift to the customer. This rule doesn't apply if you have a bona fide independent business connection with that family member and the gift isn't intended for the customer's eventual use. If you and your spouse both give gifts, both of you are treated as one taxpayer. It doesn't matter whether you have separate businesses or separately employed, or whether each of you has an independent connection with the recipient. If a partnership give gifts, the partnership and the partners are treated as one taxpayer. Caution: if you are entitled, hold on, I was going too far. So when you give out, so let's get an example. You sell products to a local company. You and your spouse give the local company 3 garment gift baskets to thank them for their businesses. You and your spouse pay $80 each for the basket, or $240 total. 3 of the local company's executives took the gift baskets home for their family's use. You and your spouse have no independent business relationship with any of the executives' other family members. You and your spouse can deduct a total of $75. $25 limit for 3 gifts for the gift baskets. So it doesn't matter how much you spent for it. You only can deduct $25 per gift. So like a lot of times when I do events, I always give out gifts, right? And I try to make sure that each gift don't cost me more than $25 because I'm going to write you off on my taxes. That's
Yep.
why I do the sign-in roster. And people be like, she's always giving away stuff. I say, yep, and I'm always writing y'all off on my taxes.
Mm-hmm.
I think I'll be joking. So now, Chris, if you want to do a giveaway, you know you're not being cheap. You know you're only gonna be able to write off $25 of it.
Yeah.
Right? Incident costs. Incident costs, such as engraving on jewelry or packaging, insuring, and mailing, are generally included in determining the cost of a gift for purposes of the $25 limit. A cost of incidental only if it doesn't add substantial value to the gift. For example, the cost of gift wrapping is an incidental cost. However, the purchase of the ornament basket for packaging fruit isn't an incidental cost if the value of the basket is substantial compared to the value of the fruit. Here's the exceptions. The following items aren't considered gifts for purposes of the $25 limit. An item costs $4 or less. A, has your name clearly and permanently imprinted on the gift. And B, is one of the number one identical items you widely distribute. For example, it includes pens, desk sets, and plastic bags and cases. 2, signs, display racks, and other promotional material to be used on businesses premises for the recipient. So these are the exceptions. When you put your name, when you get your name printed on gifted items. So sometimes when you go places, people have bags and they have the company name on it, or they have pens or sticky notes, things of that nature. Gift or entertainment. Any item that might be considered either a gift or entertainment will generally be considered entertainment. However, if you give a customer packed food, or beverages you intended to cut to the you intend the customer to use at a later date, treat it as a gift. So if you give them something and they're going to use it as a later date, consider
Yeah.
it as a gift. Right. Caution. If you are entitled to reimbursement from your employer, but you don't claim it, you cannot claim a deduction for that expense to which the unclaimed applies. That was for the mileage. We talked about that when we talked about transportation. So let's keep going. Uh, we talked about the mileage. It's changed. It's 67 cents. It's not 65 cents. But for those of you people who don't file your taxes on time, it's 665 for y'all.
Mm-hmm.
Now, some people decide that they want to either use the mileage rate or the actual car expense. And if you're not, now for me, man, I stay at the dealer getting oil changes because I drive so much. But I still don't think my actual expenses on my car um is advantageous to me. I choose the standard mileage rate because I drive more than I actually have to fix my car or have any car expenses. So now I keep up with the receipts. I still keep up with the receipts just in case, you know, I may need to do that.
Mm-hmm.
Um, let's see. Standard mileage rate not allowed. You can't use the standard mileage rate if you use 5 or more cars at the same time. So you can't be up there talking about you're gonna use standard mileage rate for all your vehicles. That won't work.
Mm-hmm.
Claimed as a depreciation deduction for the car using any method or other straight line for the car estimated life. So sometimes, excuse me, when you do your taxes, they're actually if you want to depreciate the whole year or the whole car, or do you want to break it out over time? And for some people they don't really deal with that, so they don't really use it. Now, the part I need to see a lot of people go buy their vehicles and they put it in their business name. I need to get to that part. Um, and it's the depreciation piece that most people, that falls under. All right.
Mm-hmm.
Um, let's do personal property. If you itemize your deductions on Schedule A 1040, you can deduct on line 5C state or local property taxes on motor vehicles. You can take this deduction even if you use a standard mileage rate or if you don't use the car for business. So you can remember that. That might be a helpful 10. I know here we have business personal property tax. I'm not sure, Chris, if y'all have it there, but we sure have it. They depreciate your assets in business, even if you just got a vacuum.
Mm-hmm.
Okay, so you want me to go? Okay, standard mileage rate versus the actual expenses. Okay, let me go back. It's all about what's advantageous to you. It says if you qualify to use both methods, you may figure your deductions both ways and see which one gives you a larger deduction. All right, so let me go back. So, uh, you can generally use a standard mileage rate whether or not you are reimbursed and whether or not any reimbursements is more or less than the amount figured using the standard mileage rate. So let's do this. I'm I'm gonna go back because I want to give a simplified version of that answer than what the IRS, because sometimes it get confusing and some people the actual expenses. If your actual expenses won't give you that itemization, then usually you default back to the standard mileage rate, because usually people use actual expenses to help to get to that itemization number. But let's look at it.
Mm-hmm.
Right. And that's it, because like with my vehicle, I don't have that many repairs, and so it doesn't take me to that itemization. Oh, I'm sorry. Let me get something to drink.
What?
Be quiet.
Mm-mm.
Let's get it. Let's see. Let's get it from. Let me see if there's a simpler answer to this one. Okay, here we go. The IRS offers two ways of calculating the cost of using a vehicle in a business: the actual expenses method and standard mileage rate method. To use the actual expense method, add up all the money you actually spend operating your vehicle and multiply that figure by the percentage of the vehicle's business use. To use
Mm-mm.
the standard mileage method, keep track of the miles you drive for business throughout the year and multiply that number by the standard mileage rate. The standard mileage rate for 2023, well, we know for 2024 is 67 cents a mile. This amount increased, to 67 cents. Let me go a little farther. Uh, so usually when you're doing it depends on how much you use your car for business. And I know for me, the actual expense method, it doesn't benefit me at all. So I always defer back to the standard mileage, because the actual expenses, you're going to use the total dollar amount, and if those dollar amounts aren't going to get you to itemization, which is ultimately what all of us are trying to get to itemize when you're doing your taxes. But we already know you got to get to a certain dollar amount, and if you don't own a home, or you're not paying interest in certain assets, then it's hard to get to itemization. But let's keep going. It says, should you use standard mileage or actual expense method? If you drive a company such as Uber, the business use of your car is probably your largest business expense. Taking the tax deduction is one of the best ways to reduce your taxable income and your tax burden. This is doubly important because you have to pay two separate taxes on your rideshare income. Once for your income tax, and once for your self-employed tax. The amount you contribute as a self-employed individual to Social Security and Medicaid. Both taxes are based on the net profit of your business, which can be reduced by taking a deduction for the use of your car for business. All right, let's keep it going. The IRS offers two ways of calculating the cost of using your vehicle in business: actual, we determine that, expense method, and standard mileage. Each method has its advantages and disadvantages and often produce vast different results. Actual expenses might produce a large tax deduction one year, and the standard mileage rate might produce a large deduction the next. Can you switch between standard mileage and actual methods? If you want to use the standard mileage rate method in a tax year, you must do so in the first tax year you use your car for business. In the later years, you can choose to switch back and forth between the methods from year to year. Each year, you want to calculate your expenses both ways and then choose the method that yields the largest deduction and greater tax benefit to you. If you use the actual expense method in the first year, you're required to continue using this method for that specific vehicle in the future years. All right, how to use expense categories for rideshare. Let's see. Self-employed rideshare businesses, you report your business income as well as your business expenses on the Schedule C. All right, this is for the rideshare folk. All right, so let's see. Vehicle expenses. So these are usually the expenses for the actual expense, right? That you're actually going to use for business. So if your vehicle is solely for business, then of course 100% of what you're doing, those expenses, things that it takes to operate that business, will all be considered for filing the tax. However, if the first time you got that vehicle is the first year you got it, you use the standard, you can use the standard the whole time. But if you don't start with the standard, you have to use actual expenses the entire time you file your taxes. I use the standard method because I have a better advantage because I drive so much. So that's why I use the standard method. I'm always accumulating miles on my vehicle. So for those of you who don't usually drive a lot, then the actual expense method, vehicle expense method, might be advantageous to you. It said many of the items listed in the chart apply both to your business and to your personal use. For example, you might use the same phone and wireless plan for both your business and your personal life. For tax purposes, you need to calculate the percentage of each expense that applies to your business and deduct only the portion for your business income. The IRS can disallow expenses that are supported by receipts, mileage logs, and other documentation. For this reason, many people use bank accounts or credit cards separate from their personal accounts for all their business transactions. That way, they can refer to monthly statements, online records to actually count their business expenses. So, commingling your business expenses is really good to have a separate account to determine what's business expenses and what's personal. So you can determine if you use your business card to do your fuel, you could determine it as business expenses. And when you go different places and you make purchases, or when you do repairs, whatever you're doing, you use that business card, then you can capture your business expenses. But at any rate, if you don't have a separate account, just keep up with your receipts and make sure you account for them. So let's keep going. How does the actual expense method work? All right. So I'm sure many of you probably want to know that. As the name suggests, the actual expense method requires you to add up all money actually spent in the operation of your vehicle. Then you can multiply this figure by the percentage of the vehicle's use. So whatever you do for business. So for example, if half the miles you drive are for business and half are for personal, you will multiply your total vehicle expense by 50% to arrive at the business portion, right? All right. So so for example, 9,500 total expenses times 0.5, which is 50% of your use, equals $4,750 of business expense, right? I usually don't have that much business expense, so I'm not gonna I don't get no favor when it comes to that.
Mhm.
Um, some costs. Now, some people don't really drive a lot. That definitely helps them out more, right? So here's some costs that we're speaking about: your lease payments, your auto insurance, gasoline, maintenance, like oil changes, brake pads, tire rotations, new tire purchases, title licensing, registration fees, vehicle depreciation. used as a deduction table. So when you do your taxes, this comes in handy. If you do actual, the system will automatically do it for you in reference to the depreciation. So for some people, that was what I was talking about earlier. Some people will take the depreciation, they first purchase a vehicle, they'll do it all at one time, or they'll do it every year they file their taxes. They'll break it up. And of course, the standard mileage is really easy. So the standard mileage rate is much simpler way of calculating the deduction for your business use of your car. It does not require you to track individual purchases and save receipts. Instead, you simply keep track of your business and personal miles for the year. Take a photo of your speedometer on New Year's Day and save it. You can also always see your mileage stood at the beginning of the tax year. As with other tax deductions, you'll need to determine the percentage of your mileage that applies to your business. So for me, I use an app. I use QuickBooks Self-Employed. Um, and it tracks every time I move my vehicle, it tracks my mileage for me. Right? And so it's a simple way for me to do it. Some people use Mileage IQ. You can get a certain amount of transactions before you have to pay a subscription. So for me, instead of just getting one app to do one thing, I got QuickBooks Self-Employed because I can invoice, I can track my miles, I can track my tax transactions for the entire year. I can do so much with it. I can get paid on it for business. It just makes everything easy, right? But if you're going to track your miles, you use a spreadsheet and you want to do it manually because you don't want to pay a subscription, you have to make sure you have the date, start and stop of the odometer reading, a description of your business activity, and start and ending times of each trip. Where did you go? When did you come back? So that's what you was asking me earlier, Chris. This is what I said.
What?
Date, the starting stop time of your odometer, the numbers, where did you go, and the times you started and stopped the trip.
Yeah. Right.
So I can matter of fact, I'm gonna open up, let me see. I'm gonna bring up my QuickBooks Self-Employed and show. And ever since, and or Cash Flow Manager with MyEcon, you could track your mileage. That's why I love it. You could do either or. It's only $10.95 to use that app. And for those of you who do a lot of business like me, I do QuickBooks. Ujao, you use ADP. Do you have a mileage tracker for ADP? Let's see. I'm gonna bring up mine and I'll show you guys what that looks like. Let me just log on to it and then I can show you real quick. Let me just sign in. And it's cool. They got a solopreneur. I never really looked at that one. Let me see. Let me share it. No, it won't let me sign in. I ain't gonna do it like that. I have to come back to it. But I got the self-employed because I gotta have all of the bells and the whistles. No, why you acting like that?
Mm-mm.
I'm trying to sign into my account. I don't want to do no solopreneur. I want to do self-employed. It's tripping. Tripping. And it's only $6 a month right now for solopreneur. That's those individuals. Let's see. Put it back over here. Solopreneur. And I seen them advertising this, and I was like, is there a difference? But obviously it is a difference, right? And it still allows you to track. Let's see. You can do business expense, do the mileage. Yep. It does the mileage.
Mm-hmm.
So this is for the self-employed sole proprietors. I'm trying to figure out why it's not letting me sign in, this joker. It's tripping. Let's see if it'll let me sign in right here. So I can show y'all. I love it because it's super simple. You know what? I know I'm gonna sign in like this. Where I'm gonna get it off the screen. I ain't about to let y'all get me. Let's see if I can sign in. Why is it giving me these errors? It's not allowing me to go. Something's up with that link. All right. I'm gonna screenshot it so then the next time I can show you all how it actually works. What's going on with this link and why it's not letting me do it. Intuit. Intuit is a really good stock too. Just so y'all know. All right. Let's see if it'll let me sign in. And then I'll come back and I'll show you all because it's really beneficial. And the one thing about filing taxes and doing business is to make sure that you have good record keeping tools. And so there's plenty of apps. And I'm not telling you to go get QuickBooks Self-Employed. I'm just sharing at the fact that it's an easy way to help you along the way in business. So I almost got it. And I think Chris got my econ, so he's using the self-employed app. And the good thing about it, you can be more than one business. I'm gonna show y'all in a second. As soon as it decides to show on the screen, because right now it's blank, blankety blank blank, blankety blank blank. So obviously it's having a little difficulties, but it's okay. All right, let's go back. So yeah, and this is like one of the most lucrative ways to get some tax deductions because everything else that's on this list, let me keep going. You get some benefits, but we always say follow the money, right, Chris? Follow the money. And this is what they were talking about with depreciation, how that works. Oh, it still hasn't come up. I don't know what's going on with QuickBooks today. It is down for the count. Or the internet is tripping. Can you hear me, Chris? Hey, internet might be tripping. Tripping. All right. Let's talk about record
Yeah.
keeping.
No, you good. I hear you clear on my end.
Um, it's tripping. It won't let me it won't show anything on the screen. But anyways, record keeping. If you deduct travel, gifts, or transportation expenses, you must be able to substantiate certain elements of the expense. All right. How to prove an expense. All right. Table 5.1 is a summary of records you need to prove each expense discussed in this chapter. You must be able to prove the elements listed across the top of the portion of the chart. All right, so let's see. What are adequate records? You should you should keep the proof you need in an account book, diary, log, statement of expense, trip sheets, or similar records. You should keep documentary evidence that together with your records. So many people like to just do bank statements. That drives me absolutely crazy. And that's why I don't like to do taxes, because people don't never have proof. They'll never have nothing. You generally have documentary evidence such as receipt, cancel checks, or bills to support your expenses. Exceptions. Documentary evidence isn't needed if any of the following conditions. You have meals or lodging expense where traveling away from home, from which your account for which you account to your employer under an accountable plan, and you use a per diem allowance method that allows meals and other lodging. So that's the per diem rate. You can use the GSA charts. You don't have to have evidence because you're going off of the per diem rate. Your expense or other lodging is less than $75. So if you stay somewhere it's less than $75, you don't have to prove it. You have a transportation expense for which a receipt isn't ready available. So that's for transportation. Sometimes if you take Uber from an airport or Lyft or something like that, okay? Now, adequate evidence. Documentary evidence will ordinarily be considered adequate if it shows the amount, date, place, and essential character of the expense. For example, a hotel expense receipt is enough to support expenses for business travel if it has all of the following information: the name and location of the hotel, the dates you stayed there, separate amounts for charges such as lodging, meals, and telephone calls. A restaurant receipt is enough to prove an expense for a business meal if it has all of the following information: name and location of the restaurant, number of people served, the date and amount of the expense. If a charge is made for items other than food and beverages, the receipt must show that is the case. Cancel checks. This comes from your bank once you cash a check. Um, once you write a check to an entity, then it's considered a cancel check. This is what you print off from your bank account. That can prove a business expense. Um, so what I do is, and I wish it would come up because you could see I just use my QuickBooks and I take pictures of snippets of my receipts and keep it in my QuickBooks, and it is there. And I don't know why it is not opening. So here we go. How to prove certain business expenses. So this is important. I would screenshot this if I was you. I'm getting ready to go on a business trip, and guess what? When I get down to Nevada, you better believe I'm writing all that off. It's a business trip, right? So if you have expenses for travel, the amount, cost of each separate expense for travel, your lodging, your meals, your incidental expenses may be totaled in reasonable categories such as taxi fees and tips. Time, dates you left and returned for each of the trip, and the number of days you spent on the business. Place or description, destination of the area of your travel, name of the town, city, state, right? So if you fly, all of that, you can use your flight ticket. Let me help you out. Has all that on there. If you drive, then you have to document it. If you're using a mileage app, it will pick it up for you. Business, if you're going to a hotel, it will have that on there as well. So that helps you out. Business person, business relationship. Purpose, business purpose for the expense or the business benefit gain or expense gain. Right. So usually you can write this down. Let's say you go do business and you didn't have lodging, but you had a meal. You can write the purpose of that on the receipt, and that would justify you. Okay. Business gifts, cost of the gifts, the date you gave the gift, and a description of the gift. I always make sure I take pictures. You would see I got thousands of pictures in my phone. Take pictures. Transportation, cost of each separate expense. For car expenses, the cost of the car and any improvements, the date you started using it for business, the mileage for each business use, and the total miles for the year. The date of the expense for the car expense and date the use of the car, the destination, same thing, business purpose. I always make sure I keep something, take a picture, and use that for business purposes or for filing purposes, tax purposes. All right. So it's too easy to keep up with your expenses, your business expenses. You just take a picture of the receipt and you can either keep that's oh man, that's why I hope. Let me see if I get on my phone. Because I have no clue why that's not doing that. So let me get on. Let me share my screen on my phone and I could be able to show you. Let me stop sharing on here. And let me share on my Zoom on my phone. And then I can show you. I have one that I use for classroom purposes. And I can show you what I'm talking about. So for most people, they don't so this is I'm talking about. So on my QuickBooks, right? So the mileage, you see, it automatically is calculated miles. So every time I use my vehicle, right? So this location, right, that will be personal. So I just swipe it to the right. This would be personal. I swipe it to the right, right? Personal, personal, personal. Oh, this was business. So So the so I got the time, right? I got to and from location, right? And so this is the total miles that I use, right? So I'm gonna go here, business, and then I'm gonna say I met with the client. Bam, there it is. See how easy that was? And that's all I do. I'll sit at my app and I'll do this like this. That was business, met with a client, boom, just like that. Business. And see how my numbers are going to change. And so I have my review, unreviewed, and then I have reviewed, right? So anything personal, you will see it's not giving me credit for anything personal. But you see, when I select business, I'm getting credit for it. Makes sense. And then when you go to your tax year, right, for business, vehicle, you'll see where it's adding it up for you, the business miles, and it will show you. See how easy that is? So this is why I use QuickBooks Self-Employed, right? You're able to invoice. It allow you to invoice, right? You could get paid on it. And then your transactions. So it'll bring in your transactions. So let's say this was business meals, right? So I swipe left and it automatically is going to put it to meals, right? So again, when you file, so I would have the receipt. Well, I didn't got the receipt for that. Let me see what else I got on here. Here we go. This Walmart scan. So I did some purchasing and I'm going to write it off because I was purchasing for an event and I had to purchase these karaoke, these speaker boxes, right? So I could say business, and this would go, I would change it from other, and this is the supplies. It would go under supplies. And you just scroll down. There's supplies. Supplies, supplies, supplies. Or it could be other business expense. And then I would put here speakers and hit add a note, and hit save. So you see how that works? So I love it. So I can do so much with this one little subscription versus buying all these different subscriptions. Now, for some people, they may not mind. Maybe they want to do but I'll show it to you. Mileage trackers. They may want to just do mileage. I was that person. I'm like, I'm gonna just do a mileage tracker, whatever. And then you look again, I start having to do invoices. I'm like, no, I'm not buying all these different subscriptions. Either I need to go in one place. I need to have all my business stuff in one spot. And so QuickBooks Self-Employed, here it is. I pay that one little $21 a month and call it a day. And I write it off on my taxes. And I also have the cash flow manager too. I use that for the nonprofit. So here are other mileage log trackers. You got mileage tracker by driver notes, right? So that's one. Here's mileage IQ. That's a way to track your miles. Here's Stride mileage and tax tracker. It's all about having proper documentation. Everlance mileage tracker. So boy, they've added all type of mileage trackers since the last time I've looked for one. Zero mileage tracker. And all of these are, and this one might be free. So if you don't have one, zero mileage tracker, this one is free. You might want to get it. Let's see. And it got good ratings too.
What is free?
This mileage tracker, zero mileage tracker.
What you know about it?
I don't know nothing. You know, I do all my stuff in QuickBooks.
Yeah, don't download it, y'all, until you know it works good.
I don't know anything about it. I only do my stuff through QuickBooks. I'm just sharing what's available. TripLog, mileage tracker. I know somebody use that. But like I said, if you're doing business, you might as well get something that you could put in one place. Everything in one place. So instead of invoicing from PayPal and Square and all these places, just use one place. But it's a choice. This is what I have. I got QuickBooks because it does all of this right here. Here's the interface. Invoicing, checking, mileage, sales receipts, expenses, estimates, does all that. It gives you a historical trend, right? Yep. That's the automatic mileage tracker. You can connect all your accounts, right? And there it is. So I'm an Intuit type of girl. I do my taxes on TurboTax. Everything is Intuit for me for business. So with that being said, let's look up the which one, Ash? What's up? I'm hungry. Better go in that better go in that go in that. So let's do where I said I was gonna go, I forgot. I was going to show what was I gonna show? I forgot what I was gonna show. John interrupted me. All right, let's see if anybody got any questions. Yep, QuickBooks is the bomb. I use QuickBooks for everything. Everything. I think I think I covered it. Oh, I was gonna say, speaking of that, let's look up QuickBooks. QuickBooks stop. Oh. So I invest my little dollars. Let me sign in. And since COVID, man, when COVID came in, because everybody was doing the PPP, man, Intuit went crazy. Intuit. Oh, it's stagnant. Look how much. I remember it's $620. I remember when QuickBooks, look at this drama. Look at this, Chris. We took a photo at 20. Look, when I remember when, hold on, let me see if I can refresh it. Hold up. I remember I was on the phone with the guy. We was doing some training, and I said, "Hey, you got when it fell for COVID, I said, hey, you have the stock?" Because we was waiting for somebody to come back with some answers for something. And he was like, what? He started laughing. He said, man, she over here talking to me about stocks. And I wanted to know. I said, did you get it? Look what it did. So, when PPP came along and it dropped for COVID, that thing was $200. I remember. Look what it did. It went all the way up. 22. Let's see. It peaked at $652 and $672.14. Then it dipped all the way in May, dropped all the way to $338, and now it did what? Came right back where it was in the 600s. Jeez. And look, I had marked it off here.
Who told you to do that?
To do my support and resistance. Back then, shoot, it have broke that up a couple times or whatnot. And that's this is year to date. And so it did a nice little cup. You see that? The cup. It was this a cap bounce for him. Pull it back.
Right.
Let's look at the monthly. We're just chopping up.
QuickBooks got a deal with Acorn on an Acorn deal right now.
What?
Yeah, I mean, I do that real quick. So you get
Scamps.
You get $25 invested for signing up. Let me find. Oh, is that it right there? Yeah.
I'm looking for some news on it.
Yep. No, you ain't got no news on it. $25 invested, and then it's $9 a month. That's for the basic plan. So you get $9 a month for the basic plan, 18 for the essentials, and 27 for the plus. And they invest $25 for you. So you get 70% off QuickBooks Online for 3 months. It ends on July 29th.
If you sign up,
yeah,
I'm already in it.
But this is through Acorns now.
Oh, they say we can't see your screen. Y'all can't see my screen? Oh, Lord, hold on.
I can see your screen. It's blank.
Yes, I was sharing the whole time. Hold on. Let me go back.
There
so I was
right
sharing year to date. That's why you wouldn't responded. I was wondering. You, because I had this up and I was showing I was showing you the COVID year when it hold on, let me go back. Hold on, y'all. I was showing Hold on. Let me see. Let me move it in. I was showing you
Yeah, into it.
right here. Yeah, I was showing you the how it did during COVID and how it trended.
Oh, I'm aware. Oh, golf shoes, motherfucker.
Say it again, Chris.
What's that?
No, say it again. What did you say?
Oh no, I said I was aware of that.
Oh yeah. So I was showing how man COVID that mug dip and then QuickBooks because of the PPP and EIDL and employment retention went crazy. And then it dipped back and then it did a little cup right here, pull back, and then it's back in the off to the races. It's the daily. What's up, Brandon?
What's up, Brandy?
Hey, what's up, y'all? How y'all doing?
You see how you do it, Brandon?
What's up, Brandy?
What, what you
Oh,
do to Chris? What you
oh,
do to
Chris is
Chris?
always cutting up. Hey, what about him?
What's up,
So yeah,
Brandy?
I want Brandon. I wanted to see. I forgot the website that you had taken us to. I was gonna look at the financials because I was just seeing how what QuickBooks was doing. Look at this ATR, Chris. 14.8.
Yeah, it's a mover.
It's
I thought
definitely a move.
I thought you known this already, man.
No, I do know. I didn't say I didn't know. I was just sharing with the audience. Um, Brandon, what's that website you told me the other day? I like the view.
Um, Walmart.
Wall Mine,
Yeah.
like Wall MINE.
Yep.
Oh, boy, she thinks you speaking Spanish now. You
Well,
speak
I
us,
swear. This
speak
is
us, Miss Brandon.
No, that's not it, Mo. Go back.
Yeah, we got to fire her.
this is.
ASAP. Uh, scroll over. You hit review. Don't get rid of review.
Oh,
All right, but I
There you
feel
go.
right
so.
here.
Yep.
Brandon, those stocks we were talking about for the election that we just briefly talked about, all those stocks made a move when we were talking about it. I was like, man, I know I should have. Oh,
Man, to the upside or downside? That's the question. Which ones were you talking about?
huh?
Which stocks were you talking about? Which ones?
They went all the ones we looked at that night that when we was talking about the election and we were saying, okay, we already know, cleaning the different industries. We were talking about finding that list that talked about companies that the stocks to look for with the different the presidential candidates. And
Yeah. I get you. I know what you're talking about. Yeah.
yeah, remember we was going through something and it led us to decarbonization. And when we looked at
Yep.
decarbonization, we was talking about Warren Buffett and the company that he
OxyClean.
Oxy. Yeah.
Yeah. Excellent.
Yeah. Um, yeah. So I wanted to, yeah, that's what I'm saying. But we were talking about small businesses and we went through some of the expenses that you file on your taxes before you came in.
I'm uh I'm gonna put a link in the back chat, and I want you to look at them and see if you agree with it.
You putting it in the Facebook or you putting it in the Zoom?
Uh, Facebook. So I can
Okay.
find it first.
Yeah. Okay. Well, so that's our little tax segment, y'all, for small businesses. We'll revisit some more later. But I was just sharing, depending on where you're spending money in your products and services, you could be probably earning money. And I remember getting into QuickBooks at $200, and that mug is $620 over a matter of time. I remember DocuSign too. That went up because people couldn't go to a location. They had to get their stuff sent to them. Oh, did I put the wrong symbol? Let's see, Docu. Here it is. Which one is it? I think it's this one. DocuSign. Oh, everybody has dropped. I guess everybody leveled back out, right?
Nah,
Um,
everything, yeah. What the NASDAQ dropped, I think, 500, 700 points to the percent.
they
Well,
consolidated
you know why Intuit dropped, right?
What's that?
into it.
Yeah. I bet
Into
you
it did
mother know, and she over here bragging about this shitty company.
what? You ain't gonna call my company shitty when I got in there
Yeah,
two
I
hundred
am, because them
dollars.
mother, they ass was scamming.
They,
TurboTax was scamming, and I got paid
oh
for them.
yeah, they got lawsuit. Yeah, for
Yeah,
the
yeah.
you talking about
So
because they were supposed to be charging people who taxes is under $36,000 is supposed to be free, and they were
yeah, so
still
get out of
charging
here
them
with
a
that
fee.
shit, man. Fuck them.
You gonna be talking about into it.
Yeah, I'm gonna talk about them, and I'm still gonna
They
use
was
them. Fuck
they
and
look.
He said I'm still using
They're
too.
still using. You see that, Chris? DocuSign went crazy. Wow. Look at it. They dropped from graces.
shout out
Yep.
to my
That's all
man.
that COVID. This all that COVID money right here.
Price,
Yeah.
price in the chat.
Let me
Okay.
see what he heard.
Shout out to
Let's see.
Price, man. I gotta ship his shoes off today for his son.
You said save big. S corps or the new LLC. If you're not making no money, well, Ujawu say he has an S corp. So I was always told with the S corp. Matter of fact, you know what? I'm not even gonna say that. Let me look up something real
Yeah,
quick.
don't say nothing. Don't say nothing.
That if you're not making a profit, that it really doesn't. Well, let's see. S corp. Oh, which is let me see if we can Google it. Which is better
Dragon.
for self-employed? S corp or
Oh, come on, Mo.
LLC? Be quiet. Let's see.
Brandon, come on. You don't know how to act.
Right.
That's right. See, that's what I was told. No. What they're just saying right here. If you're not earning a profit, then it's unnecessary for you to be an escort. If you
Right.
you just barely getting by, you breaking even, your expenses is more than your income, then you don't need to be no escort or whatnot. It said, should your LLC be an escort? If you're now wondering, should my LLC be an escort? The key to that answer is the amount of profit your business earns. As general guideline, if you earn about 80,000 or more in profit through your business, S corp status is probably beneficial. So I heard my little favorite CPA guy said about 20,000 is sufficient for you to go S corp, but I know a lot of people do S corp.
You said
Let
how
me
much?
back it up.
20,000?
Yeah, he said CPA said 20,000. Basically, the bottom line, if you ain't earning no money, if you don't have a profit, then it doesn't really it doesn't really help. Let me back this up. Let's read this article because this is
Hold
I
pretty
on.
might
good.
I
need to
mean,
do escort. I might need to
I
do
mean,
escort.
when you get a chance, watch the video. I mean, it's more than that he spits on about, and I just want to, I want to get your view on it, Mo, and see if it's.
How long is the video?
I think it's like 16 minutes. It's not that long.
That's long to Mo.
Yeah, right.
No, I
She's gonna
can't.
take a nap.
No. I can't play it on here. I was thinking, could I watch it real quick and then come back and feedback on it?
How long?
Hold on.
The
I'm
bottom
sorry. 10
line,
minutes.
the bottom line for
You'll get a strike for
deciding.
that?
Wait, yeah, Garfield will. The bottom line to being self-employed and taking advantage of business expenses is to lower your taxable income. Period. Whether you do S corp or sole proprietor, you do if you file S corp or your LLC, single disregarded entity, or if you file as a corporation. The bottom line for business expenses filing with your personal tax is to lower your taxable income. That's it. There's no there's no extra benefits for that. And people who are not paying any taxes, unless you're getting some type of credit for business of some sort, you're not going to squeeze blood out of a turnip. It's not going to happen. You have to give up something to get something unless you're getting some type of credit, some type of business credits to help out. So, for example, I had someone, she's a flight attendant. She makes about $23,000 a year. She paid some taxes. Someone did her taxes and they had her create a business, and he put all the business expenses on aviation fuel. So she got a credit for aviation fuel. And then he did some kind of amendment. I guess he came and did an amendment to her taxes. So the taxes didn't go through. It was rejected and wasn't filed. And so she was trying to figure out. So she was supposed to get a refund like $15,000. And so they called, "Hey Mo, can you fix her taxes? It's not filed. It's not showing on the IRS website. Can you
Um,
so right, yes, you're right, Ujao, on that dollar amount. If you profited 40K or more, yes, definitely. S
mhm.
corp, definitely. So those individuals who not making a profit is not sufficient for you at all. If you ain't making no money, gotta be
Right.
making money. To S corp is only for those companies who are making money, who are profiting. So yeah, so if you're making over 40K, it's definitely a tax advantage. But if you're not, yes, he did. Let me, you know what? I'm gonna I'm gonna show you the form. The form is
You,
a 10.
I think you
10.
speak Chinese right now.
No, I'm
Yes.
not. No, I'm
Sai,
not. Be quiet. I'm not speaking Chinese. Hold on. I'm gonna tell you the form they use.
You hear? You
I
hear?
said, hold on. I'm gonna show you the form this guy used. And I was like, girl,
Just decided, Chris. That's
she
it.
was
She
like, can
just
you do
decided.
she said, I want to get my taxes.
Mm-hmm.
I'm supposed to get 15,000. I said, girl, let me see them taxes he did. And she sent them to me. I was like, it was a form 4136. Let me bring it up. I was like, I'm not doing that.
Dang.
you, you ain't paying no fuel tax. You tripping. You ain't get no fuel tax credit. You're tripping. I'm not filing that. And you're going to say, you get in trouble. And then you're going to say Monica did it. Nope. You can do that on your own. I said, he gave you a copy of it. You can sign it and you can send it in on your own. But I'm not doing it. This is the form he filled out for her. She got credit for federal taxes paid on fuel. He said, "Oh, you're a flight attendant. Oh, then you could put in for the aviation fuel." And he did it too. And she and so what's silly is that she only made 20 something thousand dollars, $23,000, give or take a little. He had business expenses of $42,000. And he did this. He took all of it on the schedule C and put it on other taxable tentative profits. He put it on.
Oh,
He did 42,000 in income, and then he put 42,000 in tentative income, and then it deferred it to the 4136 and got
no
the credit.
fucking
And then
way.
he put the whole. I'm not lying to you. If I should have scratched out her name and her social, and I show it to you. And I told her, I said, well, he gave you a copy of the tax returns. The reason the IRS didn't process it because your ass don't have no damn fuel. You talking
No
about some? You don't
way.
own no plane. You said you're a flight attendant. You didn't say you're the pilot. You
That's
own the
crazy.
company. Yes, he put it on the so she could get this credit, and her refund was 15,000. So I said, "Are you calling me because you're looking for your 15,000 in refund?" She said, "Yes," and I said, "Well, I'm not processing that." She was like, "What? Well, you can make money from it." I said, "You process it. You send it to the IRS. I'm not doing that. No, I should do no such thing. You will not get Monica Lamb. Mm-mm. Nope." And he put it on. Look, he split it up. He put 22,000 on the non-taxable use of gasoline, and he put on nine. Look, it gets worse. And then he put another 22,000 on non-taxable use of undyed diesel fuel. She don't even know what the hell that is.
That's wild, man.
And then he put another 22,000 on the non-taxable use of undyed kerosene. Man, get the hell out of here. Y'all tripping. I said,
So,
girl,
and
not
they sent it to the IRS, and the
yes.
IRS rejected that shit, right?
Yes, it didn't go through. So she
Man,
was wondering why she didn't get paid her 22 tax return. And they came and said, of course, they're gonna come asking me. And I was like, girl, you a flight attendant. You don't own the plane, you don't run no business.
man,
How the hell you gonna explain that? The IRS probably rejected that, bounced that so far back. You ain't getting that money. So she was like, well, I want my what can you do for me? I said,
shit.
where's your W-2s? Did you pay taxes? Oh, the best I can do for you is self-employed, and we could count some of those expenses that you could possibly get for driving to and from and all these different places to work. But you're not getting no, you made $23,000 and you think you're gonna get 15 of it back? Girl, stop.
Mm.
You
No,
tripping.
she wild for that, boy.
You tripping.
No.
Mm-mm. Mm-mm. I wasn't having I wasn't having that. It was
That's
going down. Yeah. So let me get back to a serious matter. I just thought I'd throw it out when it comes to business and different ways you could get refunds. People get refunds because they have taxable income, they paid into um withholdings, and then they lower their taxable income by some particular asset class or business expenses. So you could lower your taxable income by stocks, bonds, and real estate, or you issue some type of credit, business credit of some sort, as you just saw with the fuel or things of that nature. But you don't just the IRS does not issue out money just because. You have to have some type of credit involved in order for you to get some money back. And you're not just going to get it just because. And the reason people start businesses is so that their business expenses can lower their taxable income, or they can get some type of tax break. Because you got to ask yourself after a while, are you in the business for making money, or are you in the business just because? I'm not, I already know you're gonna not get tax. You can't make a profit and then don't want to pay taxes at all. That's
right.
crazy. That's foolish. And that's what a lot of I'm not even watch the video for that guy, but a lot of people who talk about businesses and starting LLCs or doing S corps or starting a business period, they always talk about how much money you could get back, but they never tell you that you're only going to get money based, you're being taxed on your taxable income. And if you never put anything in, you ain't getting nothing out. Or you gonna get some type of credit to help you out. So a lot of times these manufacturers or these larger companies go into rural areas is because they get tax break based on the status of different people in that area. So they know they get that qualified, that $1,000 a person if you hire a certain demographic of individuals. You know what I'm saying? They're getting
Yeah.
credits to help. So people always be like, Amazon don't pay no taxes. Well, Amazon is planted in rural areas most of the time where they can get the tax break. For
Right.
all those individuals that they hire, they getting those tax credits for being in those areas. They're smart. Matter of fact, case in point, there's a cheer facility out here in Lexington. It's right outside in the rural area. And we was like, man, why he put this place so far? And the guy is right on the borderline. He said, yeah, because I wanted to take advantage of the tax credits. So I put my business right there in the county, so he could and that place is packed out with cheerleaders and tumblers and gymnastics individuals from 6 to 9 every weekend, every Friday or whatnot. But he was smart. He put it over there so he could get the tax breaks.
Yeah, that's smart.
Yeah. So, let me go back.
Mhm.
So it says the benefits of S corp versus LLCs. It says technically LLCs and S corps aren't opposing options. An S corp, as opposed to a C corp or LLC, is a tax status rather than a type of business. You have to form an LLC before you can elect to be taxed as an S corp. Here are a few things to consider if you're deciding whether to elect S corp status or simply an LLC to pay taxes as a sole proprietor. Why should you use an S corp? Let me make it a little larger for those who may be watching. It says, if you've been working for yourself for a while, you've probably felt burnt out of self-employed tax. It's a surprise to a lot of new business owners, and it's why taxes feel like such a burden when you a business of one versus an employee. Electing S corp taxation could help you cut the cost of self-employed tax significantly if your business income is a lot higher than a reasonable salary for your work. Plus, S corps are a pass-through tax structure, and you'll still be eligible for qualified business income deductions, which can further lower your tax bill. Technically, your taxation is split amongst business and your personal payroll and income taxes, but in effort, but in effect, you're still paying the self-employed tax, but only on salary portion of your income instead of all the profits you earn from business. So people who earn profits, that profit goes into, if you have a profit, it goes it's added to your personal income, and it's kind of considered being double taxed or whatnot, or you're paying more taxes. However, if you don't have no profit, then you ain't being double taxed. You might as well stay on the LLC side. This is for people who are having a profit, because if they don't go S corp, that profit will be added to their personal tax, and that's why they will be taxed more. So S corp is more beneficial to businesses who have a profit.
Right.
So here are the disadvantages of an S corp. The upside of an S corp election is usually reduced corporate taxes. The drawback, compared with continuing to work for yourself as a sole proprietor, it can be more complex. After organizing your business as an LLC, you must file the forms with the IRS. Yes. So let me definitely make this clear. If you start as an LLC and you file your taxes as a single disregarded entity, and the next year you decide you want to file as an S corp, you have to make sure you submitted the forms to elect to be an S corp. I think it's a 2255 or something like that. I'll look it up. Those forms, because the IRS is going to reject your stuff, or they'll come back and they'll send you a letter and say, hey, you know, did you mean to change your tax status? If so, you got to fill out these forms, right? Taxes also get complex because you have to pay yourself a regular paycheck and deduct payroll taxes throughout the year. You're also required to pay quarterly estimated taxes for the businesses. At tax time, though,
question.
you're still on,
Quick question.
Yes.
Now, say me as a sole proprietor, would I guess I wouldn't benefit if I did like $40,000 in sales. I
Profit.
wouldn't get the same. Yeah, I mean, yeah.
Yes.
and profit.
If you're profiting 40,000 in revenue, then yes, you probably should change over.
But let's say though I didn't do it, but I made it that year, would I still get some tax advantages?
If you saying you didn't change over?
No, let's say I did 40,000 the first year as a sole proprietor. I
Yeah.
wouldn't be able to get no tax advantages or more if I had an S corp.
Net profit. Yeah, so if you do you have any other so when you file your taxes, if you net profit 40K and you didn't elect to be an S corp and you did an LLC, you just didn't get the additional tax advantages. It just added to any other taxable income you may have, and your taxes was panned out that way.
Okay.
Yeah. So, but if the next year, let's say right now you're on the verge of having a net profit of that 40K or more, then you want to go ahead and fill out those forms and elect to be an S corp before the end of the year. So when it's time to file your taxes, you can go ahead and file as an S corp.
Okay.
Right. So like I have a friend, she has a business, she's an LLC, but shoot, her business expenses is just as much as her income, and she don't profit hardly anything. So she remained an S corp.
She don't profit anything?
I don't know what they doing over there. I have to go in and figure out what they doing with their money. She make almost a little over $500,000.
Oh yeah, I remember you was talking about that.
Yep. And all the
Yeah.
money gets spent, and I can't believe it.
Wow. Anyway, go
But
ahead.
that's business practices. All right,
I
they
would
said
say
tax
somebody's
times.
stealing.
I don't know. I ain't got the books. At tax time, though, you still only have to file a personal tax return. Right. So let's go. Most, but not all, states recognize S corp tax status. If you're in a state that doesn't, you'll file taxes differently for federal and state, and that could be complicated. You'll probably want to enlist the help of a lawyer and accountant once your business is ready for structure. Okay, let's keep going. Disadvantage of an LLC compared to the S corp, the most relevant and potential most expensive disadvantage of taxing your single member LLC as a sole proprietor is most likely a higher tax bill. If your business earns more in profit than the amount you pay yourself as reasonable compensation, elect S corp status could save you money. Which is better, an LLC or S corp? LLCs and S corp provide different and sometimes complementary benefits to your company. Forming an LLC gives legal protection to your personal assets and doesn't affect your taxes compared with operating as an individual or independent contractor. Electing an S corp taxation could reduce the amount of income you pay self-employment tax on. If you form an LLC without electing S corp taxation, you stand to pay more taxes because you'll be taxed as a sole proprietor by default. Electing S corp taxation for your LLC could save you a lot of money in the tax year. Should your LLC be an S corp? If you're now wondering if should my LLC be an S corp, the key to that answer is the amount of profit your business earns. As a general guideline, if you earn about $80,000 or more in profits through your business, S corp status is probably beneficial. But that depends on how much you pay yourself as a salary. Figure out how much your reasonable compensation would be in business first. If it is less than your total profit, you could save money in federal taxes by electing S corp status and drawing the difference between distributions instead of salary. So let's keep going with the frequent. Say it again. Frequently asked questions. Business, legal, and tax terms are confusing. So let's clear up a few questions to help you determine whether to elect S corp status for your LLC. Who pays more taxes, an LLC or S corp? Typically, an LLC taxed as a sole proprietor pays more taxes, and S corp tax statuses means paying less in taxes. By default, an LLC pays taxes as a sole proprietor, which includes self-employed taxes on the total profits. As an LLC can elect to instead be taxed as an S corp, which configures the income that's subject to the self-employed tax, usually resulting in a lower tax bill. If a reasonable salary for your job is less than your total business profits, you'd likely pay less in taxes as an S corp. Let me say it again. If a reasonable salary for your job is less than your total business profits, you'd likely pay less in S corp taxes. Profits is key. Most people who are running to S corp don't even make a profit. Why an S corp over an LLC? If you form an LLC without electing S corp taxation, you could have a higher tax bill. The IRS taxes an LLC as a sole proprietor by default, which includes self-employed tax on all your business profits. Electing S corp status for your LLC could reduce the amount of income subject to self-employed tax, ultimately reducing what you pay in taxes overall. What is a reasonable S corp salary? As an employee owner of your business, you get to decide what to pay yourself. With S corp taxation, paying yourself a salary less than your total business profits could mean serious tax savings. To keep you from taking advantage of that option and skipping out on fair taxes, the IRS requires you to pay yourself reasonable compensation. It doesn't clearly define what is reasonable. A general rule is that it has to be at least what other businesses pay for similar services. What will you earn if you were employed by another company to do what you do for your business? You can adjust your compensation based on your business. Unique circumstances include profitability, hours worked, how much business profits are directly attributed to your efforts versus things like employee, property sales, and passive income. Do S corp owners have to take a salary? Yes. In almost all cases, employee owners have to take a salary in amount that aligns with their work for the businesses. How do I know if my LLC is an S corp? No LLC is automatically classified as an S corp for tax purposes. The IRS will tax your LLC as a sole proprietor by default. You have to file a form, request S Corp tax treatment. What is the S Corp rate? Tax rate. It varies. And S Corp does not have a separate income tax rate like C Corp because it is considered a pass-through entity. Profits are passed through to the owner and taxed as personal income based on owner's tax bracket. How to change your LLC to S Corp. In order to receive S Corp tax status, you must first form an LLC. The exact process of doing depends on your state to state, but involves selecting a business name, filing an articles of organization, selecting a registering agent, and creating an operations agreement. There will also be associated fees such as an articles of incorporation fee. After incorporation as an LLC and meets the requirements, such as having less than 100 shareholders, you can then file a 2553 election by small business corporation. This process is fairly quick and should be completed in most cases within a few days. Once your business receives S Corp status, you can continue to enjoy the benefits of the owner of an LLC, such as a limited liability protection with the added tax benefits of an S Corp. Should you convert your LLC to an S Corp? By the time you're ready to form an LLC for your business, there's a good chance you're a good fit for S Corp treatment on taxation. This might not be the case if you work in particularly risky professions where you might have formed an LLC earlier for personal liability protection. In most cases, if your business has reached a point where you're ready to make it official, you're likely earn enough that an S Corp election could help you save thousands of dollars in taxes. So this is a pretty good article. So basically you learn that if you have a profit in business is when you need to start considering S Corp. And that profit, to determine what's a good profit, if your salary, if your profits is more than your salary, then you may want to start considering an S Corp. People who take business losses don't form S Corps.
Mm-hmm.
Yeah,
You're gonna take an escort or else.
he's so silly. Where Brandon? Brandon back?
Yeah, I'm right here.
So other than taking advantages of the taxes, anything else maybe in that video that we didn't say?
Yeah, he really got into like the distribution of the funds that you would use, and that's another thing I wanted to run by you, see what your thoughts was on that.
So yeah, so when when you're an owner and you have a business, you could take distributions, but that's when you have a profit. So when you take distributions, you have to report that on a K-1. So let's go back. Let's see. Let's see. Let's do.
Oh no, not in the day.
Yeah, everybody left. What happened? I dropped off.
What you mean?
Oh, that must be Brandon. Brandon must have dropped off. No, because I heard he dropped off. There you go. He back. Taking distributions from S Corp. Again, those are people who make money in business. Let's see, paying yourself the profits under S Corp distributions. Here we go. If you consider switching to S Corp taxation, it is important to understand how S Corp distributions work. S Corp distributions are the method small business owners use to get paid while lowering their employment tax liability. Here's a look at how S Corp distributions work and how they can help you take more control over your tax bill. Understanding S Corp distributions. When you own an S Corp or an LLC tax as an S Corp, you are paid in two different ways. You're paid in two different ways. First, you'll receive a regular salary for the work you do for your business. Second, you get a distribution for profits for your profits your company generates. Salaries are often best handled through a payroll service that automatically handles your regular paychecks, payroll taxes, and business tax filings with the IRS and state tax authorities. Your salary is subject to the self-employed tax, which comprise of both the employee and employer portion of your payroll tax plus income taxes. The remaining business profits are paid out on a schedule you choose and are only subject to regular income tax. Because you don't have to pay self-employed tax on your profit distributions, they're charged a lower total tax rate than your salary. As a shareholder of a S Corp, your income is a form of a non-dividend distribution, so it's not subject to capital gains tax. For tax purposes, distributions are a part of your ordinary income.
Mm.
When you operate a business, you're hopefully earning a profit. If you operate as a sole proprietor or standard LLC, all income you generate from the business is subject to self-employed taxes. While self-employment taxes are simply a cost of doing business for many business owners, earning around $80,000 per year can save when filing their income tax return by splitting their pay into salary and shareholder distribution. Because business income is irregular, you don't have to pay yourself distributions on a particular schedule. You can make withdrawals to pay yourself from your business bank account to your personal business account, to your personal bank account at any time, as long as you have enough funds left over for your salary and business operations.
Mm-hmm.
The tip: shareholder dividends are different from owner distributions. Dividends simply apply to S Corps. Distributions applies to, retract. Dividends apply to C Corps and distributions apply to S Corps. If you operate your business as a C Corp, you're likely victim of double taxation.
Mm. Mm-hmm.
Every dollar you earn as a distribution rather than a salary is taxed as ordinary income. In most cases, this means a lower tax rate. To better understand how it works, here's an example. Let's assume your business earns $100,000 annually and you take a $60,000 per year as a salary. The $60,000 salary is subject to both income taxes and self-employed taxes. The total self-employed tax rate is 15.3%. Your income taxes depend on your income rate, but we'll assume 25% for simplicity. In this case, you will pay $9,180 in self-employed taxes and $15,000 in income tax. Half of the self-employed tax will be paid by your S Corp and deducted. The remaining $40,000 in business income wouldn't be subject to self-employed tax. You would pay only 25% in income tax on that portion of your income, or $10,000, leaving you with $30,000 after federal taxes. If you were plain old LLC without the benefit of the S Corp taxation, the entire $100,000 would be subject to 15.3% self-employed taxes and 25% income tax. What's your problem? Thanks to an S Corp, what happened? S Corp, 40,000 of your income is taxed at a lower tax at a lower rate. It is also worth noting that your distributions don't count as Social Security income and therefore won't be contributed to growing your Social Security in retirement. But when you do the math on tax savings, you'll typically find the benefit of an S corp outweighs the lower Social Security.
Know what to do. Like you go put down there.
Potential pitfalls and risk. Now you might be thinking, why don't I skip the salary and pay myself entirely with a distribution? The simple answer is that the IRS won't allow it. The IRS regulations require you to pay yourself reasonable salary. There is no set standard. There's no set standards for what constitutes as reasonable, and it is a fact and circumstances test that applies differently to each person. You can consider total business profits, where you live, and the salary for simple position, but no single factor is determinative. If you pay yourself too little, you could be audited by the IRS. If the tax agency determines that you don't pay yourself a reasonable salary, you could be subject to back taxes, plus interest and potential penalties for the amount the IRS deems you unpaid yourself.
Mm.
Strategic use of S corp distributions. To get an S corp tax benefits, finding the right balance between salary and distribution is important. Due to the risks described above, business owners are wise to reset the temptation to pay themselves too little. To make the best use of S corp distributions, it's a good idea to grow your salary over time, just as many large companies do with annual raises. Consider giving yourself a performance review to ensure your salary is reasonable for your work. If you can find the right salary for your role as a solo business owner, you can confidently move forward and work to grow your profits, knowing you're making the best decisions for your business taxes.
Hmm.
When are S corp distributions taxable? S corp distributions are part of a taxable income. Many business owners must pay quarterly estimated taxes to avoid penalties when their tax returns are due every year in April. Can S corp distributions be unequal? S corp distributions don't have to be the same amount each time. Distributions can be for unequal amounts. As business income fluctuates, distributions may also fluctuate. Why are S corp distributions not taxable? Contrary to the belief of some, S corp distributions are taxable. While they're not subject to self-employed taxes, you must pay taxes on distributions at your regular income tax rate. According to IRS rules, small business income isn't tax-free income. Where are S corp distributions reported? S corp distributions are included in your business Form 1020-S. You'll receive a Schedule K-1, which is used to pay taxes when filing your individual income tax return, because the S corporation earnings are paid through your personal income tax return. This type of business entity is considered pass-through entities. All right, there you go. So
Hey,
now
Mo,
you
can
know.
share that link?
Okay.
I just woke up.
So basically, when you have an S corp, you give yourself a paycheck and you do distributions and profits. Your regular paycheck, you're subject to income tax and self-employed tax, and then the distribution portion is only subject to income tax, which
Right.
would fall. And so one of the reasons they may be saying that Because if you look up,
Look up what?
income tax rates,
Oh, for your tax bracket.
yeah, you look up your tax bracket. Right? So your tax bracket for 2024, let's say you made 100,000, right? And let's say you give yourself 100,000 in distribution, then you're going to get taxed just to 22% on that 100K, right? But if you was an S corp, but if you profited 100K and you was just a regular LLC, you're gonna get taxed as 22% plus the self-employed tax, 15.3. So you're getting both. That's the difference between the two. You're just getting a little bit of favor. So instead of getting taxed twice, you're getting taxed once, right here. Whichever. But let's say you made 20,000, then you would, on your distribution piece, you would get taxed 12% instead of 12% plus the self-employed tax rate. So the self-employed tax rate, let's see. Tax rate. Self-employed. So let me give you a 15, yep. 15.3%. So instead of getting the 15.3% plus 22%, you get just the 15.3 on your regular paycheck that you give yourself in the S corp, and then on the actual distribution on the K1, you're getting the 22 or whatever your profits is. So if you want to know how much you would be taxed based on, let me get out of it. If you want to know how much you would be taxed, whatever your profits is, you come to this tax bracket and see if I got anywhere from 0 to 23%, I'm going to get taxed 10%. If I got anywhere from, so it would better be anything 23,200 or more, you get the 10%. Now, if your profits is less, well, ain't no less, because it used to be where, remember before it used to be from 0 to 10,000, you wouldn't get taxed at all. Now, see, it didn't change all that. Now, 0 to 11,000, you're gonna get taxed. Either way it go, they're getting you 10%. So anything 23,200 or more, you're gonna get that 12% tax. Oh, I'm sorry, I'm in the wrong tax bracket. Single. If you're single, if you get more than 47, this used to be different. Whew, they're kicking butt. They push, they come get their money. Anything over 47,000, distribution or personal, that's 22%. So this is super important. This is why when you're pricing your products, you have to tax. You have to consider the taxes. If you don't consider the taxes, you would eat your profits up in taxes. You won't make no profits. That's why understanding the taxes is important. You have to charge taxes.
Yeah.
Because they're gonna get you. You're gonna pay it regardless, whether you want to or not. And that's not even including the sales tax. If you're selling something. So in the tax year, so when it comes out to taxes and people saying how you can get tax breaks, let's look at this. What are some self-employed tax credits? Let's see if it exists. All right. SETC tax credit is a refundable credit provided up to $32,000 in aid for self-employed individuals affected by COVID-19 including entrepreneurs, freelancers, healthcare, da 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 da. Man, let's see. You got tax credits paid for paid leave, special issues for employees. Let's see, stimulus 21, self-employed tax credit. Let me see. So, paid leave. Let's see. Let me check this one out. What they talking about? Self-employed tax credit. I need to look that up.
Mm-hmm.
Let me go look that up in the IRS site because I can't take no third party. Deal with that coming. I can't take no third party.
Come over leave it tomorrow.
Leave it
I'm at Friday.
about 1 o'clock.
In the morning?
1 o'clock in the evening.
Oh, okay.
Afternoon.
Okay.
The SETC tax credit. Let me go to the IRS website and look that up. I'm stretching my knowledge today. So really, when you're watching the videos and they talk about taxes, it's good to know, how does that work for you, or does it apply to you, or what are the benefits from that? Because sometimes it don't apply. Especially if they don't give all the information, you get kind of stuck in it. What's it say? SETC. Because then somebody would say, well, man, I thought this was gonna work. And it didn't work. No, it works. It just may not work for you.
Mm-hmm.
Everything don't benefit everybody, and every case is different. So the easiest way for me always to explain the S corp is: do you make a profit? Are you ready to pay yourself? Because people get anxiety when they got to pay themselves, and then if you ain't making no profit, what you over there jumping to the S corp for? You ain't even got no money. You ain't giving yourself no distribution.
No.
I know a friend, she went to S Corp, and I was like, you don't even make no money. They shut down business. Talking about you an S Corp. Stop. I don't even see that there.
S Corp, baby. What you gonna do?
I don't even see that tax credit. Let's see, tax credits.
Yeah. You pay me real quick. I'm trying to see how much I'm trying to see how much I done made this year.
A lot. I need an employee discount.
Who? I be trying to give you the discounts. You be like,
yeah, because you be giving me at the wrong time. I gotta save money for your discount.
No, I'm talking about Nike discount, man.
I know. I couldn't do it this time because I got 2 trips back to back. I couldn't do it. I gotta save my coins, and I gotta get a rental.
What coin? Where you going after Vegas?
Actually 3 trips. I'm going to Phoenix the following week, and then Phoenix, Arizona, because that's where our veterans event is at. And then Labor Day weekend, I'm going to possibly, depending on the weather, Galveston.
So you coming back out here?
Yeah, my great aunt birthday weekend and my mama's birthday weekend.
Mm-hmm.
Are they gonna act a fool? Watch.
You know we are.
Not with a hurricane, you ain't.
Nah, no, I ain't.
That damn weather's tripping this year, boy.
It's tripping bad, bruh. All week we've had, I'm talking the bottom of the sky drop out type of rain. Not no little bit of drizzle.
Yeah. Yeah,
I don't know if y'all seen where Chicago had tornadoes.
Yeah.
You seen the snow in Philly?
Talking about it.
Y'all had tornadoes and Philly had snow
Philly always have snow.
in the summer.
No, that's
Oh,
crazy. They have snow for real?
Yeah, watch. Let me show
And
you.
they talking about climate change ain't real.
yeah.
No, man. They creating it, man. They creating the weather like that. Oh
Watch.
shit. Dang. I didn't know they could create the weather like that.
What the weatherman said for Chicago that two tornadoes touched down at the same time at
That's,
O'Hare and Midway. Now the
that's
distance
crazy.
between those is probably like 100,
Yeah.
200 miles away.
Let me see.
Mm-hmm.
Wow.
And then what I think when we had those tornadoes, I don't know when that was, but so our next door neighbor had a gazebo in the back, and the damn gazebo caught air. It broke their fence and it hit outside of our house.
Oh,
Damn.
It hit the gutters like
Damn.
4 or 5 times.
Dang.
did you scream?
Hell night, did I scream?
Come on,
Yes.
Mo. Really?
I would have been screaming. Look at this.
I was knocked
That
out.
Brandon
you
ain't no
asleep.
punk like you.
You didn't hear it?
Nah, my sister woke me up. She said, go outside and check out, see what that noise was. I went outside in the front and like halfway out in the front, I could see this big ass thing in between these two houses, our house and the other house. I was like, what the hell is this big ass tent doing in here? And I get the oh no, that's the gazebo.
Dang.
Fucking 300 pound
Wow.
gazebo jumped the fence.
Dang.
I was like, damn.
Yeah, that's crazy.
Yeah.
Wow, Chicago.
You talking about Philly has
Look,
snow. That's
yeah, look. Philly has snow. Watch. There's it. 6 days ago. I can't show it, but let me see. There's it. July 16th. Watch. Let me see. We got some pictures. Oh, I gotta find the pictures. You're gonna be like, what in the world? Let me see the images. Let me go back. Yep. It was snowing. Hold on. Is this one it? What's the date on this? Yeah. Let's see. Oh, this 23. Hold on. Go back.
let's see. Let's see how
Look,
much profit
look,
on it.
look at this. Let's see what day
Oh,
it is.
man.
Yeah,
Oh, man.
2024. Look, Philly. Look, Chris, look up.
That's crazy.
In July.
That's
Hell,
crazy.
Yep.
hell in a hand basketball. I'm telling you, boy, they playing with
Really?
that weather.
Yeah. That's crazy as all get out. Yep,
Oh,
It's big
y'all.
farmer right there. That's big farmer with that weather, boy. All right. You ain't gonna catch no cold in July. My ass. Let's go ahead and
yeah.
throw some snow on
They on some, cuz.
Mhm.
it. You better go ahead and pick up some of that Sudafed and that damn Robitussin.
Yep.
God dog.
Mm. All
Man,
right.
stop. I'm trying to
You trying to what?
I'm trying to calculate this row.
Who?
This row, on Excel spreadsheet. Most still don't get it.
You trying to calculate a row in Excel?
Yeah.
Go to sum, the little sum, click the boxes.
Wicked and dragging.
I'm on
Yep.
the app though.
Yeah, you can sit on the app, click on it, and then go down to the bottom and the little three dots. Click
Mm,
that, and then scroll down and look for some.
auto
And
some.
you're gonna have to click the boxes and hit the plus sign, and then click the box plus sign.
See.
Yep. All right, y'all. What else y'all got going on? I didn't exalt my brain.
I find it highly interesting, and it's just getting more apparent, man, that it's time to leave this place. The amount of people, celebrities, from comedians to even, class B, class C rappers like my son are really pushing Democratic agenda. I believe these niggas is getting paid. Him, Plies, uh, DL Hughley, bitch ass. These niggas getting paid, man. Like they really, 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 really promoting and pushing motherfucking Kamala Harris. And they was doing it to Biden first, the Democrats. I'm like, bro, are you serious? And then, there's always been this debate. Oh, she was locking up black men and all this other stuff, right? And other people, they just like, oh man, we gotta ride with we gotta ride with the black woman, man.
The
She black.
Brooklyn Black.
I'm like, well, I don't want to get technical, but first of all, her dad, that I know what Jamaicans look like. Like he's mixed for sure. He's definitely got black in him, but he's mixed. So is she. So I'm like, no, she's not black like my mother is black. She's not black like Mo is black or Brandon or me. She's mixed. So whatever. We're not gonna play with the technicalities, okay? So why the hell should we vote for Kamala? Because we don't want to vote for Trump. And why does Trump have to be the opposite person that we have to vote for if we don't want to vote for her? Why is it, oh, so you gonna vote for Trump, a racist and such, and all of this other shit? He a rapist, he hates women, he hates black people. I'm just like, bro, like this is why I say propaganda is one of the worst things ever to destroy, not just, one ethnic group of people, but all people. Because you can just start believing shit like that and run with it. And I'm talking about people, who have no background. Like my son doesn't have a political background. I'm like, dude, stick to rapping, bro, or whatever you do, talking to youth in the streets, stick to that. Politics is not your thing. He started talking about, oh, we had the lowest black unemployment, under Biden. I'm like, bro, what are you talking about? You must don't read economic data to even say some crazy shit like that, even though that may be true. But just because there's low unemployment doesn't mean that those black people are doing better off financially. That doesn't mean that. So I'm just listening to these dudes talking. It's just like it's ridiculous. And the cult following is real. Niggas are drinking the Kool-Aid, especially black women. When it comes to Kamala, you donate, hopping on Zoom calls. I'm just like, are they serious? You're entitled to do whatever you want. But I just find this very disturbing that you got these niggas online really trying to push this shit onto us. And I'm just like, bro, like, stop. Like, I just see how sick this is. So just because we don't want to vote for Kamala, that means we gotta vote for Trump. I'm like, no, it doesn't automatically mean that. What y'all think about that? Have y'all seen this?
No.
I've I've seen it at work. Like people are talking up Kamala like with a fine tooth and comb. I'm like, you don't even know that broad, honestly.
Why
You
y'all
know,
gotta call her names?
okay,
Oh,
you don't know Kamala Harris. My bad, Mo.
thank you.
Uh,
Y'all
we
know
follow.
all
No,
those
go ahead.
all the individuals on the Zoom. Y'all know she's in a sorority, so y'all know they run deep. She's part of
Perfect.
the Divine Nine. Y'all know
Perfect.
they run deep. So that whole why they all on the Zoom. That's where that comes from, right there. The who else is on the ballot? And if you don't vote, then what? You still gonna get
Right.
one of them, regardless.
But
You
Right.
know.
I think
But
this is a setup. Oh no, go ahead,
I
Mo.
I I will hope that we definitely have to pay attention to some of the. This is what I would like to talk about. I don't want to talk about one or the other. Um, Vice President Harris or former President Trump. I want to talk about how a third party nonprofit organization, the Harris Foundation, has been successful with doing resolutions to which has turned into policies. I spoke about this before when someone said, "What do we do as a Black community? How do we get our voices heard in Congress?" And I made an example of how the DAV, how veteran organizations, how that's what we do. We create resolutions, which are in turn gets presented to Congress every February. All the service organizations back to back take a week on Capitol Hill and share testimonial to um, the Veterans Committee in Congress, right? To these different members of Congress in hopes to get our bills passed. I think our community, not sure which organization would have the best leverage or who is actually doing that. So one of the things that we do is we have an email blast where the organization sends whatever that resolution is or that bill is, we send it out to everybody who subscribed to that organization. It could be anybody could subscribe, and everybody gets this email. And the email, matter of fact, I'm gonna show y'all an example what I'm talking about. So I'm talking about solutions to the Black community and how we can help ourselves. Because we have to actually get that going in that same manner in order to start getting our agendas taken seriously, whatever they are. So let me show you. I want to show y'all something how this can actually work. And so I was listening. I had never heard of when they start talking about Project 25. Then of course that's when I've heard of the Heritage Foundation, and when I heard on what they do, um, subliminally they basically do the work for the politician, and the politician just pushes it. And once they get enough co-sponsored votes, then their bills get passed, which means their interests get put to the forefront. And so that's why you have a third party project being pushed as a political party, and that is being done because of how they are asserting themselves into the political realm. And I think that our people don't understand that in order to get your voices heard, it numbers, you have to galvanize in numbers, but you don't galvanize just on the street with the picket sign. You have to galvanize in writing. And I think that if so the perfect time and probably to head towards that direction was when ADOS had when they was pushing for it into Congress, or when that what was it, HR, was it for, I can't remember the one, whichever the HR, what anyways, when we had all that push behind reparations, would have been a
HR
perfect time
40.
to get the HR 40. When that would have been a perfect time to get those resolutions popping in Congress because we had that voice. But I'm gonna show y'all something what we do, and I'm gonna show y'all what we do, which would in turn explains what Heritage Foundation is doing. Let me find one. Okay, I found it. Let me share the screen.
Dang, I made 10,000 this year already.
You're doing good. So this is what happens. So here's a bill for female veterans, Improving Menopause Care for Veterans Act, HR 8347. So the organization itself, they create the verbiage. They get the bill, they send it because I'm subscribed to the site. They send me letter, hey, please support this bill, right? Tells exactly what it is. So what I would do when I hit take action, this email blast automatically populates. It's going to automatically populate. Hold on, let me put this over here. Maybe this monitor is tripping. Hold on. Let me stop that. Bring it back. It automatically populates to where and what representative is supposed to get this bill. So I bring that up to say this, right? So everybody who's already sent the bill up, the individuals like such as myself who got the email has already sent that bill to be signed. This is how many more people they need to help facilitate this bill in order to get this bill heard on the floor, right? In order for Congress to kind of take it serious. So the email blast is automatically set up to go to this representative in South Carolina because that's where I am. So if you got the email in Texas, Chris, yours would have your representative. In Brandon in Illinois, yours would have your representative. So it automatically picks up that individual, and then it automatically has the letter drafted for you, so you don't have to go try to figure it out yourself. And then it says, hey, it comes from Monica Lamb here. So I'm telling my congressperson, my House representative person, hey, I want you to support this bill. And then I hit submit. So what our people have to do is get some type of email blast like this. We have to have an organization that's pushing. Now, we for the veterans, we actually could create resolutions and create bills and we send them up. Some of them get taken serious, some of them don't, right? But this is the method they use to galvanize the people. And they do it by using technology. And all we do is we just go in, we read it. Some people support, some people don't, right? I send them all, right? Because even though that bill may not apply to me, it may apply to somebody who needs it. You know, the Veterans Caregivers Re-Education and Reemployment and Retirement Act. This is super important because we have people who have given up their time in their life and their careers to take care of veteran. But when that veteran passes away, guess what? That income goes with it. And if it's a spouse, that spouse income goes from being probably 5,000 to 7,000 a month down to probably $900 a month. So what we're trying to do is say, hey, the spouse took care of veteran, they gave up their career and their time for it. Y'all need to either give them, continue that veteran pay, a percentage of that pay, because they get like 25% of the pay. Civil Service gives their caregivers 55% of their pay when that person passed. And then this is a Senate bill, and as you can see, it has Graham and Scott there. It automatically goes to them. This is what we need. We're trying to get our voices heard, we're trying to get our issues, but what's happening is we don't even know what we need. Let's look it up. We don't even know if we say, man, what are they doing for Black people? And you say, okay, well, what do they need to do for Black? I sit in town halls all the time, and those people running local or federal will say, what do you need? And crickets. That's where the resolutions come in play. The resolutions come in play because it tells them, what do you need? What are we looking for? So what we should be doing is having classes on how to write a resolution. Representative Johnson did a class like this before. Jermaine writes resolutions all the time in the state because he's a state representative. How to write resolutions. And I'm not saying that this is the perfect storm, but I'm saying for legislation. But this one gets the ball rolling. How to write a resolution. Let's see. Let's see if they got a government site we can use. If not, we'll just use any of these right here. Because the resolutions is what gets the ball moving in Congress. If you don't know how to write a resolution to get your point across, we in trouble. And that's why we're in trouble. So regardless, see how to pass a resolution. This is what we need to be talking about. How do we get our point across? How do we get them to solve what it is that we need? Right? You have to do resolutions, and then you have to have the numbers behind you to get the legislation passed. All right, so let's see. I don't know, what's your thoughts on that? I know I said a lot.
I mean, that's ideal, but I'm a realist, man. And I keep it a buck. I don't see that happening.
But so if you don't see
No, not
go
that
ahead.
in specific.
Go ahead.
That's cool. You're gonna have people participating, right? But we need it on a larger scale to actually move the needle. I don't see that happening in our time. That may happen some generations down if we do the right things. But I don't know. I don't even know who we is.
Anybody who has that interest.
Right.
We is anybody who have that interest. So when we do resolutions for the veterans, we are asking anybody who want to support veteran bills to say, hey, can you sign up for our CAN network? And it's basically somebody putting a database together that can shift this out, that can send them email blasts and get this to those legislators. And that could be anybody. It doesn't necessarily means we or them or they are all people who consider themselves to be African American or Black. It could be anybody who want to support the interests or the needs of our demographic. And so in order for us to get anything or for us to have our way on any side of the party, some organization. And you don't have to be, have the numbers per se out the gate, but you do have to be able to write. You got to be able to write, and you got to be able to get this sent up and put it in your legislators' hands. And those individuals, and you get the numbers behind you. It's like going around with a written petition. You can't get them to do anything unless you got a certain number of people who have signed their signatures to the petition. This is the same method. The only thing is, it's digital. So if you could get someone, and I shouldn't put DAV on the screen, but if you could get someone, if someone or somebody who could galvanize, for example, Farrakhan does a phenomenal job of galvanizing the people. One of the conversations that should have been had is, who in the audience is savvy enough to create a database such as this? And whoever that may have been, because we got a lot of computer science individuals, then you task that individual, meet with those individuals. That's the meet of the minds. Those are the type of conversations we can have. It's good to motivate, but let's put the pen to paper and get some action. And you're not gonna get no action unless you get that written document in the hands of these congressmen and women to get these co-signers. What we in Congress, what, 116, 117?
Something like that.
117, I think.
Larry, funny, man.
Let's see. Yeah, 117. Lord, I'm way behind. We in further than that. We in 118.
Okay.
118. So we in Congress 118. These are all of the things that they have to consider, but it doesn't mean that they're gonna go into law. And so when we think about what are our needs. So let's talk about it. What are our needs? What do y'all think some of our needs are? I think there's a definitely, even if you say there's a disparity in wage rates, right? That's an easy fix if they make it across the board, the same wage rate at the federal. I was showing some people today, this is crazy. I was showing some people today, let's see, I had project manager. I was showing them how to come up with their per hour. They say, man, how do we come up with our rates? And I went to the BLS. I say use the government site because with the BLS, they can't, we was doing grants and we was coming up with salary. And the lady kept saying, make sure you account for the hours you put towards the project. And it was like, man, and she said, how did you come with hourly rates? And I said, I used the GSA site and I just chose something that was close to what what was applicable to us. And so she said, okay. So we was like, okay, you may want to consider your rates. Okay, cool. Let's go look. So when I went here and I was showing them the different rates, if you're using the BLS, and they were surprised based on the jobs that they have right now, their occupations, saying, man, hold on. I don't get paid that. What jobs you get paid? Well, when you're trying to negotiate your salaries, this is when you should come. To say, hey, according to BLS, the salary for this position, the medium salary is this, and you're offering here. This is how you counteract employment wage when you're dealing with how much you're going to get paid. So if I was having a conversation with Trump or Harris, I would say, how can you make the BLS wage rates the standard and not have this double standard wage rate out there? Because if you look at this occupational outlook, this Department of Labor, okay, we also could go to the Department of Labor and see the wage rates that the rest of the civilians out here, the private sector uses.
Well, that's a point too, Mo. That's why I was saying, even if unemployment was 2%, it doesn't matter if the people still not making enough money with one job. They got to work 2 or 3 to make ends meet. Unemployment doesn't matter. It can be 0% unemployment, but if people are still struggling, it fixes nothing. What, that you got a part-time job and then you have to get another part-time job to even, cover what you got to pay? That's not a good talking point.
Right. Yeah, because you can't, you got to be able to say, okay, how does this work? So like, for instance, let's see what they're talking about here, because this is my first time seeing this. July 1st, 2024, Department efforts to restore and extend overtime protection. But the problem with that is that it's probably for it's probably for federal employees, and it doesn't affect private sector. But let me go back to where I was going before I go here. Hold on. Let me go back because that's not where I wanted to look. I wanted to go. When I go to inspect our sites, and I have to pull these posters, and I pull up the minimum wage rate poster. See this right here. This drama right here. This $7.25 that private sectors can use as a base to pay people. But I just showed you the on the federal side, what they're paying. This our problem. We ain't making no money.
Mm-hmm. My
Why
point
do we have
exactly.
why we have two standards? Why is there a Fair Labor Standard Act that private sectors or can hide, basically, because that's what they're doing, hiding under this. And then when you go to, where's it at? When you go to uh, here, when you come to DOL or you come to the BLS, the Bureau of Labor Statistics, and you come and look up wage rates or whatnot, these salaries are different. Let's go to the let's go to the so right now, right? In if your employer had to go in and put your occupational rate, your occupational code, right? Let's just go into this one. Where's that? Hold on, right here. So every employer had to do this right here. Had to go in your profile, and they had to put this code, and this code is for workman's comp purposes, right? So whatever your job title is, you put in that code, it'll tell you the wage rate for it, right? Let me go. There's another area I want to go to of this that it'll give you more than just that particular that one. Where is it at? I was on it earlier. But even here, financial specialist, 80K. Man, ain't no financial specialist in the private world making no 80,000. Like it's almost like
You said, hold on, say that again.
let me go back. In the private sector, financial
Uh-huh.
specialists, 80,000, they're probably not making that.
Who?
We could go to companies and we could look up their job titles. We can go to Indeed
Oh
and we
yeah.
can see how they're paying people. Hold on. I want to go to I don't want it I don't want it like this. I want it to show where it shows the pay rate, the hourly rate, but I have to figure out let's go back because I want to show you all. And this is the problem. We got double standards out here. You got environmental issues where people don't have economic development in the area.
Right.
And so you're expecting, like Representative Johnson, he said, man, we doing stop the violence marches. We doing speeches. We having after school things going on. We doing activities. We got a tech center. We doing everything, and they still shooting each other. You know. And I said, y'all ain't giving them no money. They ain't making no money. They still making $7.25 an hour. They can't even
Right.
pay their bills. Hold on,
Right.
let me find it. You know, and it's and that's why I hate when people say, "Oh, it ain't about the money." Says who?
Right. Right.
In who world? Because one of my buddies was on Facebook talking today, and she was like, "Y'all gonna do a walking trail on the park?" She's like, "Y'all need to gather up all that asphalt, find out how much you got, and go put it on Crestwell Road, which is one of the main roads in the town." She was like, Y'all need to take all that asphalt that you're gonna do in that walking park and go put that down there on Crestwell Road because I'm sick of changing my axles on my car." But you want us to get excited about a walking park, but you about to use asphalt for when you could go and fix the roads in the town.
Right. What the
Yeah.
taxes was for?
Right. Hmm,
Yeah, that's crazy.
let's see.
Mhm.
So a lot of things that we need, we can't even get to. I mean, either side. Here it is. So what site is this? This on AI. I'm trying to get to this part right here. That gives me that. I don't want to go to ZipRecruiter because I want to go to, but even ZipRecruiter, if you just right here, project manager, right? Look at that, $65 an hour, $55 an hour, average $50 an hour, 25 percentile getting $37 an hour, right?
Mhm.
If I when I go to the BLS, when you start pointing out these salary differences and they start talking about, let me see, I think I may have gotten it. Yeah, this is the area I want to be in, right? So when you go here and you're looking at the salaries that are out there, this is not happening in a small business world. They ain't paying that. They're paying based on that other wage rate. So they're probably getting like 20 something dollars an hour, you
Right.
know, 30 something dollars an hour. When in actuality, the average, the mean hourly is 50.44, depending on
Mm.
who you're doing project management for, as you can see, over $50.
Mhm.
But but and majority of the big businesses are doing business with the government, so they're making money from the government off your tax dollars, but they paying you pennies.
Mhm.
I just think that, we gotta know what the fight is. And a lot of our fight, we say, oh, we need better for our kids, we need better for our community. Okay, what do you need? You gotta draw it out. You gotta be able to write it out. Let's look it up. Let's see if somebody put one together. Black Agenda. They used to have one out here.
Mm.
Oh, they got a Black Agenda report. They actually got a website. We actually got a website. Okay, let's see if we got an agenda. An agenda. They may have one. We may be able to find one. Um, so what do y'all see?
Keisha Renee, them your peoples?
Huh?
Keisha Renee, them your peoples?
Where?
Oh,
Who you see it?
she on
Where you
your
see
page?
it? On what page?
Your Facebook.
Oh, I ain't paying attention. She posted something on my Facebook?
No. I just seen it on your friends list. It popped up in people you may know.
Oh, that's my cousin.
Oh,
Let's see what this article says. For African and Black working class and colonialized peoples, middle terms elections in the U.S. offer no relief from war, repression, and capitalist misery. And this was written in on the 10th of July. It says, as I wrote a couple of years ago, the decision of the capitalist rule class to intensify the class struggle in response to an upsurge of popular anti-capitalist and anti-imperialist struggle in the 70s created the conditions that are driving the ideological and political crisis of today. After more than 50 years of counter-revolution in the form of right-wing neoliberal reform project, U.S. society and political discourse have dramatically shifted to the right. Political struggles among the ruling eliminate elements that were non-violently played out in the general electoral process have now turned violent, irrational, and counterproductive for the long-term sustainability of the system as a whole. Uh, the implosion of the Democratic Party as a result of the party bosses attempted to displace the party's nominee and the bipartisan commitment to war by both parties as the most effective weapon to prop up profits and maintain global U.S. hegemony are byproducts of this deepened crisis of the system and the affairs that absent radical structural change, the electoral process will only provide the illusion of popular rule. The agenda was set with the Lewis Powell Memorandum in 1971, written at the request of the United States Chamber of Commerce, probably the most influential structure of capitalist rule at the time. The concern for the chamber was the need to find more coherent counter-offensive to the attacks against the system over the previous years. At the center of the anti-system attacks during the 1960s was, of course, the Black Liberation Movement and the anti-war movement. Powell made the argument that the capitalist class had to recognize that their very survival was to stake, and that meant capitalists had to understand that as a class, their interests transcended their individual enterprises. And while the tone of Powell memo was professional and lacked rhetoric, exercises the need for a more intentional and strategic class war was the call that leaped out of the Powell memo. The day is long past when the chief executive officer of a majority corporation discharges his responsibility by maintaining a satisfactory growth of profits with due regard to the corporation's public and social responsibilities. If our system is to survive, the top management must be equally concerned with the protection and preservation of the system itself. The political implications were obvious. The U.S. ruling class concluded that it could no longer afford to exercise its excesses of the liberal welfare state and reform liberalism that, as far as it was concerned, had produced a failed war strategy, cultural decadence, rapid inflation, urban riots, and demands for rights from groups representing every sector of U.S. society. This was the beginning of the right wing neoliberal turn, the societal wide counter revolutionary policy that also required a domestic counterinsurgency strategy that would have a military but more importantly, an ideological cultural component. Domestically, the main target of the counterinsurgency would be the revolutionary, nationalist, and socialist force of the Black Liberation Movement and new communist formations. Internationally, the, the turn to neoliberalism translated into a brutal intensification of colonial and capitalist imperialist value extraction from nations in the global south, buttressed by weak, corrupt, repressive colonial states, politically and militarily prompt by the US. The neoliberal counter resolution produce irreconcilable contradictions that we are living through today. The gap between rich and poor nations and between workers and capitalists had never been more pronounced and immersion so cruel. For the Black working class, the neoliberal turn was a catastrophe. The offshore of the U.S. industrial base, with its relatively high paying jobs, along with the reorganization of the economy to a service economy and the privatization wave that devastated social services and public employment, where Black workers were disproportionately located, created structural precarity, clarity that only needed one incident to push tens of thousands into desperation. In the 2000s, there were two: Hurricane Katrina and the economic collapse of 2008 that saw the greatest loss of Black wealth and income since the end of the Reconstruction period between 1977 and 1986. Compounding this devastation, the crimes against humanity represented by the 2020 COVID pandemic, in which literally tens of thousands of Black people, mainly poor, unnecessarily died because of the state failed to protect their fundamental human rights to health and social security. While Katrina exposed the fragility, hold on, of Black life in the Gulf Coast, the economic crisis of 2008, just a few years later, plunged millions of African workers into a desperate depression era, scrambled for survival in conditions where Black labor was super foolish. And the very existence of Black life was seen as a social problem. The mass slaughter of COVID pandemic closed out the first 2 decades of the century that was supposed to be exemplified American greatness, with a demoralized and confused electorate turned into a washed up heck politician named Joe Biden. Midterm elections, if stopping for um if stopping for facadism is on the ballot, what is it that the Africans experienced all these years? Neoliberalism was a rightist capitalist reform project. Today, it informs the context for the midterm elections for African and Black workers. The objective materials needs of Black workers and our desire for self-determination, independent development, and peace were not on the ballot. And while the dual poly represents the primary political contradictions obscuring the reality of the dictatorship of capital, the most aggressive neoliberal actors now operate in and through the Democratic Party. Consequently, the unspoken character of the competition between the two parties is that elections have now shaped up since 2016 as a contest between the far right elements represented today by Trump forces and the neoliberal right represents by corporate Democrats tied to finance, capital, and transnational corporations. This is the undemocratic choice. The Republicans represent the disaffected white nationalists, petty bougie settlers who think they are indigenous to this land. The ruling corporate capitalist elements of the party are, for the most part, nationalist oriented, dependent for their profits on the domestic economy. Some elements produce for the global markets, but they are in constant struggle with the big capital as the capitalist economy naturally concentrates into its monopoly stage. Democrats, who historically had been associated with labor and the common man, even during the period when it was the party of racist segregation under the empathy system in the South, is today the party controlled by US based monopoly capital. For workers, this form of bourgeois democracy has no space for structural represented in its interests of workers, the poor, and structurally oppressed. The working class and poor are slowly beginning to understand that. That is why early evidence suggests that African Black workers did not participate in numbers that were necessary for Democrats to have prevailed in some of the key races. The Democrats have nothing to offer, no policy, no hope, no vision. Some of the cowardice, phony progressives in that party suggest that the National Democrats did not push an economic message, even though it was clear that the economic crisis was their most pressing concern. But what economic message? The Democrats long ago abandoned their base, and they continue to desperately find ways to dilute the influence of their most loyal base, African Americans, by seeking out that elusive white primary female suburban vote. What in the midterms reaffirms is that the class war that Powell advocated for in the 70s as a primary strategic objective of the ruling class continues and is intensifying, even as the ruling class is in crisis and cannot rule in the same way. This means that the people must disabuse themselves of all illusions and sentimental ideas around common national interests with this reckless and increasingly irrational bourgeois. We cannot allow ourselves to fall prey to the sick propaganda that diverts attention away from the failures of the capitalist system. January 6th and Trump, evil Putin, the calculating Chinese, that exaggerated crime issue, and immigration issues are all meant to divert us away from the fact that our lives are empty. With that we have no time for friends and family, mindless, soul crashing work characterizing our existence. If we have it, and the fear and anxiety that comes from the precautious existence saps our spirits and turns our confusion and anger inward. Ideological clarity that stems from a liberated conscience directs us to a conscience that is in a system that is the enemy, not our neighbor or the undocumented gardener or food delivery person, not the peoples of Nicaragua, Haiti, Venezuela, and Cuba who just want to live in their own way and in peace. The Democratic Party is morally bankrupt, shelled, hollow out by years of lies and corruption. Many do not want to accept the bitter reality that we Africans and colonialized peoples most objectively acknowledge that nothing will substantially change in this election or any of the other bourgeois election. We cannot and must contest in those spaces, but we are clear as long as power is retained by the pan European colonial capitalist dictatorship, Black people will continue to suffer, and collectively, humanity will face an existential threat. So basically, we still have no agenda. Either way, what?
So I can't go to Vegas. You have to cancel my trip.
Why? You ain't going. I ain't
I
canceling
can't
you.
go. I have to go to orientation on the third on the first. I don't know where any of my classes is gonna be on the first day.
Well, you boy, you better get out of here.
I can't go until
You gotta go.
I can't. You're gonna be in Phoenix.
I'll be here.
No, I can't go. It's next Thursday.
Boy, leave me alone.
It's next Thursday.
So basically, they said the party is for us. We are screwed. And so, how do we find our way? Any ideas, y'all? We got to find our way. What was this written? Y'all done left me. They done left me. I'm over here talking by myself.
No, I'm still here.
We gotta find our way, unless we're just going to pick bits and pieces of what we benefit from and we draw from either way. But either way it go, we gotta find out, what's gonna be beneficial to the people.
Yeah.
And so other than that, we just personality chasing. Where do we fit in? Huh?
That's been happening for the longest.
And how do we select? How do we use what's available to help us out, regardless? So that's what I've been doing. I've been tracking to see, okay, what can I benefit? What do they have going on that I can benefit from? Right now, we've been into environmental. I spoke about this before to y'all. Environmental protection. This is where we've been finding funding at in this EPA budget, because a lot of our communities are having clean air issues, water issues. We can't revitalize our communities because we probably have some water and sewer issues or economic development issues. So a lot of our issues in our communities have to do with environmental problems, because they plant all these different companies in there, and they have all of these, they're polluting the air, they're polluting the land, they're polluting the water. So therefore may have some behavior implications. So this is where we've been finding funding right here. EPA. It's a lot of money. Climate. So when dealing with climate change, they put a lot of money. And also, what I found out, not just in EPA, environmental in environmental protection, also we've been finding money here. You think all them lawsuits that come out with different people, those people be looking for their community. They be finding ways to sue these companies so they could come up and make some money.
Will have to be a war. You hear me?
What'd you say?
Don't have to be a war.
To do what? So we can get some favor.
Yeah, we gotta be able to take over those resources.
It's the only way. So we gotta have some. So before we go to war, we need to be trained.
Yeah. The economy.
You know, gotta be trained. We gotta be positioned. We gotta be able to position people.
Yeah. That's the only way. That's one of the only ways that I see. Either a war happens or something. I don't know.
So weatherization. And I would have thought tribes are getting enough money, but they in all the conversations because what in my opinion, what they're looking for now, they're looking for in order for to making ways to print more money, this, that, or whatever. They're looking for communities they're trying to create the reason why they need more money. So the only other places is on tribal land, reservations, or rural areas, because inner cities are already there's nothing that that's there that they see other than if they having some type of water issues, but the rural area is where the funding can go in because it's nothing there, right? So you talking about energy issues, being able to get those power lines out there so that people can have improved energy sources, energy
Right.
efficient. So Dominion and Honeywell went around offering free services to the rural area.
Who did?
Dominion Energy,
And Honeywell?
yeah. Honeywell and Dominion is kind of together. They they went off and offered free services because they probably got some weatherization funding to go out and help people, right? Or clean energy programs. Like, we have to know how to follow the money. AE used to say that all the time: follow the money, follow the money, follow the money. You
Yeah.
know. So if we can't get nothing out of the politicians or out of the parties, then we need to be finding out, okay, what about my community and what is these people offering that we can tap into some money to better help us.
Right.
And so that's what we've been doing. So this grant right here, look, Renew Americans nonprofits. These are all different. Renew American schools, workforce development programs, community leaps, local government energy programs. Let's click right here on this block grant. We're getting ready to get $200K from 2 different organizations. They got money from Department of Energy.
Yeah.
So, but they are passed through. We submitting for a $20 million grant for the rural area with called the Change Grant with environmental protection for the rural area to reform that whole area or
Right.
whatnot. What did I just tell y'all they put the money out for? Look at that. Tribes. Because you see, in our area, in the rural area, we don't have nobody sitting at the table. We don't have people going to the meetings when they come up. But these folks been sending folks, these indigenous, tribal people, whatever. They've been sending people to the table. That's why this has come up a lot in a lot of meetings I've been in or whatever. Tribes. Why? Because those are untapped. Those are untapped areas. Remember, at one point, we just gave them money and sent them on their way. But now they're saying, okay, we need to get more money. How we could get it? what area we have not gone into, and it's been these folks. And the rural area as well. So there's some funding for the rural area, and they're coming for this community energy, revitalizing the community. But I'm gonna tell you, this stuff takes time. Um, to read about and to find. So it has to be a team. It has to be a team. They're looking for this energy efficiency, energy conservation, energy usage. So there's an organization. Let me show y'all. It's called Regenesis. We getting ready to benchmark them. So there's a few people in South Carolina have tapped into this money.
Give me a
And
second.
this guy got $300 million and reformed his community. Show you. Let me go to his website. Let's see. Look at this. Let me see if this is it. Is this it?
I'm gonna be in the background for a second.
Okay. Brandon, you there? Or is it just me? Brandon, you here, but I can't hear you. This guy revitalized his community. He used to be a representative. I'm trying to see where I can show you his picture. His name is Harold Mitchell. He was a representative. Started with a regular nonprofit. He's not dead. He's alive. He's representative. Right here. Regenesis Institute. He revitalized his Spartanburg, the area of Spartanburg. With what? Environmental justice and revitalization. Man, I wish he had the information. I could show his video. Let me show his team. This is him right here. This is him, Harold Mitchell. He took environmental protection money and revitalized. They're up to $300 million in funding. Ain't that crazy? They're redoing the site. So gotta follow the money and figure out how to make it work. And it comes with people with knowledge who's been in communities that has tapped into these things. So I've been learning. So I don't know everything, but I can tell you where they putting their money at. Right now, I can tell you what people are tapping into to revitalize their community. And a lot of people have tapped into Department of Energy and Department of Environmental Protection. And I just saw right before my eyes $250K, just like that. Just for putting a meeting together to talk about it. Not even getting their feet dirty yet. Brandon, you ran away? It's about time for me to get off anyway. I'm just rambling. I'm just rambling. It's been real. It's peace, power, and profit, you guys. I hope you learned something about your business. And I hope you guys begin to make the right decisions. And I'll continue to build on